What's going on, my SPAC traders out there? Yes, it's a tough day in the market, but we're here. We got Chris and Mitch. What? In the house. Hit that like. Let's get the SPACs attack started. What's going on out there? I know that you guys must be checking your pulse right now with this type of market. We're going to talk about checking your pulse in a company that got an FDA warning. Guys, stay tuned. We got a great show for you. We'll talk about some top SPACs. And of course, we'll bring on the brains to this show. His name is Chris Ketchy. Some know him as Chrisopedia. Some might know him as the guy from the roadmap, the NFT king over here. What's going on, Chris?
Hey, Mitch, what's going on? Yeah, hope you had a great weekend. Hey, we're back, right? We haven't had a show since Monday.
Back, man.
So SPACs Attack is back. It looks like some people in the chat missed us, so we're happy to be back. But yeah, market's not looking too hot, but we got some news to cover, and we can get into some stocks to watch maybe on a red day like today.
Hey, like always, there's going to be ups and downs in the SPACs. We're going to be talking about it. And Chris, I think we need to do another one of these, man. Another SPACs underneath 10. I think we might need to do another of those shows. If you guys don't remember, this was one of our most popular shows. And look back at that. It's always fun to look back at our old shows, see how we were looking at SPACs. And definitely we'll take a look at that. But before then, let's go ahead and get into some headlines. Chris, before we get into headlines today, I do want to talk about an event coming up. Now, one thing that we do want to know is that, hey, guys, we always want to talk about these asset classes that are probably untouched and at least unmastered. And I think one of those unmastered areas really is cannabis. Why? Because there's still just so many questions, whether it be when regulation is going to come down, how do the taxes come into play, the banking system, so many questions yet unanswered. And you guys can find out so many of these answers at the one and only Cannabis Conference.
Yeah, love that promo. That Cannabis Conference is going to be great. I know I saw Clever Leaves among the companies presenting. They, of course, went public via SPAC. So if you want more information on cannabis companies, make sure you check out the Benzinga Cannabis Conference. Let's dive into some headlines, and then we're going to spend some time looking at our watch list in detail and also looking at some stocks to watch. For October, yes, we are. October, fall is here. And then if we have time, of course, we'd love to get to some ticker time. So if you guys have tickers, please hold them right now, but we'll be calling on those in a little bit. Let's start the day with some analyst ratings. We, of course, had lots of analyst ratings last week, too, that we didn't get to, but I want to start out with the fresh ones from today. So up first, we have Beauty Health, Skin, SKIN, one of the better performing SPACs. Owlet and Company initiating coverage with an outperform rating and a price target of $32. This again has been a high flyer. We're over $26. But it looks like more room to run. 52-week high of 28.62. You've got Cohen and Company saying that they still don't have huge name brand awareness and there is room for more opportunity. So keep an eye out, SKIN. Then one of our fallers from a time ago and a gainer late last week on their news was Ride, Lordstown Motors, RIDE. So RBC Capital is maintaining an underperform, but raising the price target to $5. So Ride, of course, had news last week that selling their Lordstown plant in Ohio to Foxconn. They are going to rent it from Foxconn. And also we're going to see Fisker rent part of that space too. So two SPACs to watch on this Foxconn factory news. But yeah, RIDE, keep an eye out, the analyst note here.
I'm just wondering at this point is, where was the price target before this? Because if the raise was till 5, I mean, was the prior price target at 3? Do we know what the prior price target was, Chris?
I don't. That was my question too. Is it's kind of like, hey, I think shares are going to underperform, but maybe they're not going to underperform by as much as I said.
Bad.
So, and again, I think that factory news, right? It's slightly bullish for the company, right? They're going to get that cash infusion, right, by selling that factory. But now they're going to turn around and have an added expense, right? Before they own the factory, now they're going to lease the factory. So they're going to lease and pay rent. And Foxconn's going to be able to use that building, for other vehicles. They're partnering with Fisker, which Fisker, of course, isn't doing a pickup truck right now. They're focused on cars and SUVs. But Mitch, what happens when Fisker wants to do a pickup truck and Foxconn has, two companies making pickup trucks in the same facility competing against each other? I mean, that could be a story to watch in a couple years. I still just don't know about Lordstown Motors, on a long-term basis, if they can, get this truck to market and compete. They may still need more money, and I don't know what's left to sell at this point.
Yeah, one of the things I would say is when we talk about Ride, we got to keep in mind we have another company that is going to be going public, right, Chris? Coming out soon. Rivian coming soon with a truck
huge
is
IPO
on the market, right? And so that's my biggest thing, Chris, that I've been watching. And I think there's going to be definitely some of these that get to the forefront and start competing with some of these major truck producers, right? And so Ride is going to have to compete with what? It's going to have to compete with A, the Tesla truck, B, the Rivian truck, and C, the Ford Lightning.
Yeah.
I can tell you right now, those are not the three that I want to compete against.
No, I mean, that pickup truck market is huge, right? And Ford has dominated the F-150, the top selling, not just truck, the top selling vehicle in the US, right? And now they're going to make an electric version of it. I don't think I'd want to compete with any of those three either, Mitch. But Lordstown, it seems like they still want to keep on that plan. So we wish them the best, and we will follow along with the story here. But yeah, $5 price target and underperform rating, not the greatest thing for them to hear this morning. Our other analyst note, we have Astra Space, ASTR. Bank of America beginning coverage with an underperform rating. They're calling out limited upside and development risk. So they said, while Astra plans to target the growing small satellite launch market, we believe the lack of proven performance will weigh on the share price. And they said that they're several paces behind Rocket Lab and Virgin Orbit, two competitors. So they're giving a price target of $9 here on Astra Space. I do like Astra Space. There's several, space stocks out there. This among them. We're trading at 784, down 7% today, on that analyst note. One stock out there that is trading higher today, we have Jasper Therapeutics, JSPR. So shares are trading higher after it was announced that Amgen, a leading pharmaceutical company, owns 2.7 million shares of the company. So remember, Jasper was the one that had high redemption and shares took off right on that low float trade. So we traded all the way over $15 last week before crashing down under $10. Then we saw another big move up, and now today up 15% on that news from Amgen. Remember, this is a low float, so there is the possibility that this one could run today, but as always, be careful out there with these low float, high redemption plays. Then we have Tattooed Chef, TTCF. So I talked earlier this year, right? They were getting added to Target stores. They have good relationships with Sam's Club, Costco, and other retailers. The news out today that they now have their products in Publix supermarkets. I, of course, don't know the Publix brand as well here in Michigan, but I'm guessing, Mitch, since you used to live in Florida, I'm guessing you know Publix, because when I went to Disney World, I know we went and got our groceries at Publix, and it's a big deal down there. What do you know about Publix? How big of a deal is this?
This is how you know that I know about Publix. All I gotta say is those public tender subs. Oh man, those are good. If there's anything I miss about Publix, Chris, is going to Publix and getting me a tenders sub. They just, just chicken tenders sub, but man, the classic at Publix. Can't go wrong then. And I mean, if you guys know Publix, I would compare it to Kroger's because it's very at that level. Now, one thing that I would stand out in Publix is that you're going to get the higher quality item. We're not talking kind of that budget grocery store. We're talking high-end grocery store with the high-end products. But hey, one thing about Publix that they do well is customer service. A lot of people talk about Publix and their customer service. We'll see if it continues. Tattooed Chef. We'll see if it comes back. I mean, let's take a look really quickly. Daily chart. Has it just hanging out today? We'll see if it can get back above 19.
Mitch, I love that call out that they sell, not as cheap of products, right? They're not a discount grocery. They're more of a not higher end, but a little bit higher price point. I like that because that's where I want Tattooed Chef's products to be at, right? Is a place where people are willing to spend that extra money. I mean, if you're Tattooed Chef, you're plant-based food, you are a little bit higher priced than some of the food options out there. So I think that's a great deal for them. So we'll keep an eye out on Tattooed Chef. And another high flyer of recent, ARQQ, so Arkeet Quantum, shares are up 6% today. The company announced that their founders voluntarily extended the lockup. So what that means is that the founder shares will not be able to be sold as quick as normal. This is a kind of a bullish sign from the company that the founders are staying put, not selling those shares. You see that chart. I mean, this was a high flyer, right? Formerly DFNS, I believe. It took off and then it cooled off. But as people see the story, I think we're going to see more interest in it. It does have quantum in the name. This is a cloud play, a SaaS play. So it's in several of those high growth areas. So keep an eye out on ARQQ. Then OfferPad, OPAD, those shares are trading down. The company announced an offering last week. So shares are down 14%. We're down to 730 right now. This is something that Mitch and I have actually talked about, right? What happens when these companies get high redemption at SPAC merger vote date? They probably are going to raise more money as we go forward, right? If you announced a SPAC merger deal and you were counting on $500 million of cash and you only get $250 million in cash, you probably want to raise that other money so you can complete your projections, your plan, right? Without that money, you may not be able to hit on everything that you said. So I do like OPAD. It's in the same space as Open Doors, Zillow, these online real estate plays. But down today on that mixed shelf offering, it does look like we will get earnings from OfferPad later this month. So that could be a catalyst. We could see those housing numbers come into play. So keep an eye out. OPAD. Then we got news on a big one, right? Polestar, which recently announced a SPAC merger with GGPI, a Gore SPAC. So they announced the opening of their New York City retail space. This is their 20th sales market. So they plan to have 35 locations in the US by the end of 2022. Right now, 20 locations. Polestar Manhattan, they say, is in a great location in New York. They also have locations in LA, San Francisco, Boston, Dallas, Detroit, and many other top cities in the US. We talk all the time about these EV companies and going the direct to consumer route. They need brand awareness and they need to get their vehicles out in front of people for test drives and to see the car up close. So I think this helps with that. So definitely liking GGPI and Polestar here. And then, as Mitch said at the top of the show, we did get news out from a former SPAC getting a letter from the FDA. So this is Owlet, WLT. This is the company that makes the smart sock monitors for babies. We've talked about them several times. We had them on the show earlier this year. So on October 1st, the company received a warning letter from the FDA. In that warning letter, it says that the Owlet Smart Sock product is a medical device that requires pre-market clearance from the FDA. And Owlet has not received FDA approval. So the warning letter requests the company cease commercial distribution of the smart sock. So again, it doesn't require, it says it recommends that they stop selling the sock. So the sock is used for measuring blood oxygen levels, pulse rate, and other items. So this warning letter, again, saying, hey, please stop selling the sock. Benzinga has reached out to Owlet to get more comments from the company to find out if they plan on stop selling the smart sock, if they're able to sell it without certain designations, and what their plan is going forward if they do plan on getting FDA clearance. Shares are down 22% today. I mean, this is big news. This is a SPAC now trading under $5, and this FDA clearance letter is a really big deal and could be a big negative for them, depending on what they decide to do going forward. And we do have one deal announced this morning. This was a small one in the biotech space. So Moon Lake Immunotherapeutics going public with Helix acquisition, that ticker HLXA. So they are a clinical stage biotech company focused on creating next level therapy, inflammatory skin and joint disorders. Company valued at $620 million, $115 million pipe on the deal. And then we do have 3 merger votes this week as we look at our October calendar. And I will have the complete October SPAC merger calendar out on the Benzinga site later today. So check out on benzinga.com, or you can look at my Twitter and I will share it when that is published. Today's merger vote is LSAQ, LifeSci Acquisition 2 with Science 37. That's a life sciences company valued at over $1 billion. Shares are at $9.78, already past the redemption phase. This one could see heavy redemption. And then we have tomorrow for ITAC with Arb Robotics. That's the 4D imaging radar company. And then also STWO with ESS Tech, which is a long-range battery company. Their batteries used to support renewables and stabilize the electric grid. This is an interesting one that I have actually looked at more recently. Shares at $9.50 today. Again, all 3 of these could see heavy redemption. They are past that redemption deadline, but keep an eye out. We'll see what kind of movements we get later this week. That's what I've got for headlines. Mitch, any thoughts on the Owlet news? So OWLT, we read company, so we are still waiting to hear back. They got that warning letter, which right now is just, asking them to stop selling the sock. So it doesn't, definitively say, hey, you can't sell the sock, although I pretty much think that's what they mean. What do you think, though? Do you think they could be able to maybe just sell the sock, without the blood oxygen levels and maybe just the heart rate or the sleep monitor and still attract parents to this product without those extra designations?
Well, this is what I'll do. Let's take a look at what they advertise here on their site, right? I'm on outletcare.com, straight from their website. And this is what they have, right? Where I'm on the Owlet Smart Sock, goes for 300 there. Looks like you can buy 3 smart socks and get a cam for $25. So looks like they're trying to sell that. Now, here's where I start talking about a little bit more of what's approved. They look like they have an HSA and FSA approval, but you can clearly see they're not an FDA approval, right? And I think that's important there. I don't think they were ever stating that they were FDA approved. And now I think just the question is do they need that to sell this product, right? I think that's what Chris is bringing up the question. I think that's going to be also important here. Looks like it does. I mean, it has won some awards before. So I'm pretty sure for those awards to be given, they had to do a little bit of research, definitely. But I mean, I think this is just going to be a battle of what really is acceptable in these products. I think this is the first one really to come more into question. What are you thinking, Chris?
Yeah, I mean, this one surprises me. Mitch, look at that site. They advertise it and all the things it does. They also have won all those awards that you showed, right? This is a top parent choice. Like I've seen this on, parent blogs, in parent magazines. It's a top seller, I think, on like Amazon, Babies R Us, all these different baby stores, right? So all those places are selling it, knowing exactly what the company does. To me, I wonder why it took so long for the FDA to send this letter, right? What prompted this? Why did the FDA not send the letter before? Again, they don't advertise that this is FDA approved. I don't know if Owlet thought or knew that they needed clearance for some of these designations. So to me, I think the big question here is, does Owlet, take it off the market, get that clearance, and then sell it again? Or do they try to sell the product without the designations and, just avoid the FDA clearance? I don't know what could be better. Obviously, short-term financials would get hit if they took it off the market. But I think in the long run, getting that clearance could definitely help. But I mean, we hit 375 this morning on these shares, Mitch. They did bounce back a little bit, but I'm following this, right? Because again, parents are willing to spend the money, and parents were willing to spend the money on this product without it saying FDA approved in big flashy letters before, right? So I think parents will continue to buy these products. So I just want to see this FDA, item get taken care of and Owlet continue to grow. The other thing, when we had them on the show was they were trying to diversify into other segments like telehealth and other areas. Those areas likely will also require FDA approval, right? In order to be a telehealth company. So I think they're going to have to work, hand in hand with the FDA regardless. So they might be better off here just, taking this off the market and getting FDA clearance.
Yeah, I'm not sure if that's the way they're going to go, Chris, but I mean, definitely FDA clearance makes sense now. I mean, one thing that I will state, I mean, they do have the data to back it up now. I think it says here they have 4.24 trillion heartbeats monitored to date. And so, with that being said, I think that the data is there to take it to the FDA. And now it's kind of a matter of a process and how long that's going to take. One thing that could happen is, like being mentioned also in the chat, I could see something like where they maybe change their wording a little bit, sell the product for the time being, and look for FDA approval. I could see that happening over the next kind of, I'd just say maybe 2 years or something like that. So you'd have to think of a long-term outlook. But what I'm going to do is I'm going to start looking at this one and start trying to average into this one, because one thing I could also see is if this thing goes down to, let's say, $2, why wouldn't someone maybe step up that's like a bigger product owner, like maybe even a bigger company that makes baby products, and then just takes this under their belt? I could see acquisition coming into play with such a valuation that's coming down low. I'm gonna look at this one because I tell you the truth, I like the product. So I'm just wondering when to really start dipping my toes in. But I might start dipping my toes in underneath 4, then look to add at 2, so that if I do get an average down, I'm looking at somewhere between $3 of risk down towards 0 bankruptcy. I don't see this as a bad look to maybe get a discount play here.
Yeah, and I mean, I think bankruptcy, obviously long-term potential, negative worst case scenario. I mean, you said it right when you read from their site how many heartbeats they've monitored. I think their data alone and their customer base alone would be worth, a company acquiring, right? To have that customer base, to have, that data. So I think, as you said, the risk reward could be real nice here. So I'll be watching this thing today to see if we dip below $4 again. But again, as a parent, I think there's definitely a need for a product like this, and we'll have to wait out the FDA clearance here and see what happens.
We'll see what happens with this one. Warrants will be at 3 cents, John says. Well, hey, let's just say there's a reason why I've told you guys, be careful with those warrants out there. Be careful. All right, let's go ahead. Let's move forward from Owlet. We'll move out of that. We'll take a look at our watch list, see what's moving out in the market. And of course, we'll talk a little bit of some top SPACs. You guys hit the like, and we'll be back with the watch list. Sometimes left alone in the heat of the night. All right, so I will let you know that, guys, there isn't so many. There isn't too much to talk about here, but we'll talk on the bright side of things and try to give a positive outlook here. But one that I did want to bring up, Chris, that I even got mentioned on Money Mitch. I don't know if they're out there in the chat. Let me know if you're there. I told you on Friday, hey, ask Chris on Monday what's going on, because I didn't know. Let's take a look here. SPIR. Huge turnaround in this one, man. I didn't even understand why I first started moving in the first place, but can you explain me? Do you know what happened, Chris?
Yeah, they had. I'm trying to remember what the news was now, because it was a partnership with. Okay, so on Tuesday last week, they had a partnership with Space Chain to demonstrate blockchain technology in space. I mean, talk about two trendy topics, right? Space and blockchain.
Blockchain with space trade.
Blockchain and space. I mean, it seems like something you wouldn't have thought of years ago, but hey, it's something very possible in the future. So I think this was a move based on that news. But again, I do like the space segment. I do like Spire Global. They have some good partnerships. Again, they're trying to do like a space as a service data play, right? So they're going to provide data to companies. Mitch, you and I talk a lot of times about data and how important it is. And also these, SaaS plays, these, recurring revenue, right? So they're going after that market where they're going to get and gain that data in space, and then they're going to sell it to companies. So I like it. And imagine if they could actually do blockchain in space, right? And if there is something there, could be a growth driver, long term. Probably not necessarily in the short term, but definitely something to watch.
All right, I'll pay attention to this one because it turned around. I didn't know what the story was, so if you came from Money Mitch, well, there you go. You got your story. That's why you come to the SPACs attack, man. Let's keep going. Let's take a look here. What do we see out there? I see DCRC, decarb up. Let's take a look here at that chart, see what we're seeing. It looks like we're seeing a pullback from 1050. A lot of these have been kind of pulling back from the move that we were seeing, which was giving me ideas that we were into another SPAC wave, but big returns right now. Chris, is this kind of what you're seeing out there in the environment?
Yeah, the other thing with DCRC here, Mitch, is this is Solid Power, which is a battery play. Remember QuantumScape, right? We've been talking about QuantumScape and how QS is gaining interest and has been running. This is a competitor to QuantumScape. So with QuantumScape shares up, I think maybe that's why DCRC is getting some more interest here, because essentially they're going public with a much lower valuation than QuantumScape. So if they can do better technology or get to market quicker, DCRC is one I've had on my radar as a EV battery play.
Explains why we've gotten some pop recently, and also I think it just followed QS. Now QS also kind of doing the lead here, and we'll pay attention to see what happens with QS. But QS is also breaking down that big leap that it did up. It went all the way up to almost 30, now coming back down through the gap. Probably it might test back down towards 21. We'll see what happens with QS and some of these movers. Let's keep going into another one here. Looks like I'm seeing Bridgetown, 2 holdings up. Not too bad. I mean, there's some volume in here. Is there any news on this one, Chris?
I haven't seen any news. This
Yeah,
one
I don't think I did see anything.
had a rumor before with Property Guru, which is a property company over in Southeast Asia, but that deal has not been formally announced. So maybe it's getting closer. But yeah, I don't know why that one's moving today.
It's one thing I can commonly see here, Chris, is that a lot of the ones that we do have slightly up, what are they? They're at that 990, at that 996, 970 mark, just hanging out underneath 10. Then when we look here down towards the losers, what are we going to see? We're going to see some that are up above 10, looking to keep moving. If not, what do you see? You see hugely below 10, like let's say $3, $4. And so this gives you that idea that there are some that are turning back down on the downside, and there's some that are hanging out near that $10 level where you can actually take some risk to return here. I'll point out here one that did turn around significantly that I was looking to see if they were going to put out any NFT news, but doesn't look like that's what's going to happen here, Chris. And it looks like there was even a buy rating. Somebody got caught here. Luke Capital was like, yeah, I see the stock going up, $29. Let's go for it. Nope. Got to be quicker than that. That's what they said today. Down 7.8%. Coming back down towards 22s. Looks like it could head towards the $20. This is one that's actually held pretty well, I think, Chris, because I think we would have thought it would be back down by 10, because I haven't heard any news come out of Playboy in a long time. Have you heard anything, Chris?
No, I haven't heard anything since they announced that acquisition, right? Didn't they acquired like a e-commerce lingerie company, I think. But yeah, I think they'll have earnings. It looks like the Benzinga Pro calendar is estimating earnings in November from Playboy. Okay. So we're getting closer, right, to getting some news from them. And I mean, yeah, Mitch, I'd love to see some NFT news out of Playboy. But I mean, really, since they launched that first one, they haven't really updated their NFT plans. And remember, this was a company that kind of got that cherry on the top, right? Where the shares increased as it became an NFT play, and the NFT play is kind of gone away from it now. So, I mean, look at that chart. So without NFT news, I mean, I don't know here.
I did see the Playboy calendars are out, Chris. Could be a revenue driver.
That's the catalyst.
Could be a revenue driver.
I'm sure it
I'm
is.
not sure.
It is.
Maybe someone in the chat has one. Who knows? Let's keep going. Let's get into the next one. TMC there. The metals, Chris, the metals looks like it's going down to the seafloor here.
But what about those FinTwit people that told me that TMC was going to $35 a share? What happened to that, Mitch? Because I thought we were hitting 35.
They're the guys jumping in right now trying to just dig up the sea floor because they don't see the company there right now. So they thought themselves jumping in might save the company. Can't blame them. They might as well jump in with the Titanic, because this is a negative look here from $13, Chris. That's where we really started this downturn, all the way back down towards $4, bouncing there, then heading back down a little bit closer towards the 428s. We'll see what happens here, Chris. It doesn't look good for TMC.
Yeah, and I mean, we talked about this, right? We warned people, Mitch. I mean, this is one where, shares got hot, right? Because it got heavy redemption. It became a low float play. But how long does the low float play last? It doesn't last forever. And you will see more shares get into the float of this company as the pipe gets unlocked, as warrants get called, as they do share offerings. I would not be surprised at all if TMC does a share offering soon. I mean, this is a company that needs money. to complete their plan, right? They want to mine metals off the seafloor. That's not going to be cheap, right? You can't just, dive down with your scuba gear on to get these metals, right? You need a whole business, a whole platform. So TMC, I'm staying away right now. We'll see in a couple of years what's going on with this. Mitch, I got one for you to pull up.
Let's do
We
it.
talked about space. How about RKLB?
Okay.
So Rocket Lab, this was a high flyer over the past month, but we're falling today. But it looks like we're holding pretty well that $14 line. What can you tell me about support on RKLB? Because this is one that's been on my radar for a while, and I'm liking it, and I'm wondering where could be a good stab at RKLB.
Well, one thing is we've had kind of one cut through the lows, two cut through the lows. Look for another cut down here, somewhere between underneath 14, going towards 13, and then coming back around through 16 on the bullish side. But one thing that I'd point out on Rocket is I'll call it the space indicator or SPCE indicator. I say look for that one to turn back around, because I think when you heard about the news that, hey, all right, well, they're not getting hit anymore by the FAA. Now we'll see what happens with them from here, right? Because this was looking like it wanted to become a rocket itself, and then came back down to earth, right? So we'll see what happens with SPCE, and I think this is the one you got to watch for to turn back around to the positive side. Then you'll start seeing Rocket start making that move back up, and they could move hand in hand. I say you pay attention to both of them. Looks like we're getting a shout out in the chat for a little bit of a tip life. Looks like somebody wants us getting at least our little tip. We'll take the little tip, and I don't know if we should really jump into this, but let's take a look. What do we got here? We got SHCR.
Yeah, so SHCR is share care. This is one, Mitch, that's gotten hammered, right? So so we're at 736. We're down 8% today. I mean, you look at the last month, and this thing has traded, even the last 3 months, this thing has traded under 950 consistently, right? It's been a while since we've seen $10. I do like the story, right? Because this is a company helping people with mental health disorders, right? Mm-hmm. It's the telehealth play for mental health. They also have that brand awareness. I don't know if you've seen the commercials, Mitch, but Michael Phelps, I think Demi Lovato, right? So some big names. I mean, if you read anything about sports and celebrities right now, you're seeing a lot of them speak out about mental health. So, when does a company like this really gain that footing from being a pure play mental health play? And also, are they an acquisition target from like a Teladoc or another telehealth company? Or can those companies launch their own mental health platforms, right? That's the thing. Does ShareCare have anything proprietary? Or do they just have, the first entry to the market and those celebrities involved? So, something to watch with ShareCare, but again, I like the story and the fact that they're helping people. But as far as fundamentals and financials go, I think they are a little ways out here from really turning around.
Yeah, this is one that I try to look at the weekly to show a little bit more of what you see here. And you see what, guys? You see kind of more of a flag pattern on the downside. This is a bear flag. You could say that it tried to break out of the flag there. If you drew it like that early on and then it broke out, came back into the flag play, I would be looking for another move back down to 650s. You want to see kind of sideways period with this one and then get it back above $9. Looks like it really rejected when it got up there. Big thing on the monthly is you see it coming back down towards these wicks. That's why I wouldn't want to play with it right now unless it really holds really quickly back above 750. For right now, I think it's still heading back down towards the lows. We'll see when this one turns around. Not the best looking chart right now for me on a monthly chart. All right, let's keep going. Let's go into the chart, into the chat here. Let's see what we got out there. Sorry, we'll wait for positive earnings. Yeah, I think that's something that you definitely got to play there. Wordplay game is on fire today. Hey, I tried there with the little space play. We'll see what happens there. Smash the like Sue says. Let's keep it going. Everything is down. Don't worry, Mark. I won't catch you with your pants down either. Let's keep going. Let's get into it. I bought more hut. Look at Carl looking into some blockchain. Hey, that's what you got to do sometimes. You got to take some other plays out there. I know I got stopped out in some of my reopening plays today, Chris. With that being said, I'll bring up a reopening trade that I thought possibly could get hot, but I'm thinking right now it's probably a not. Let's take a look here. BFI, one that you and I have talked about in the past that we looked for an upside look. Sometimes Chris and I are going to be wrong, and we admit when we're wrong, and we also admit when we're probably right too. Hey, got to give yourself a pat on the back sometimes, right? So let's take a look here. What are we seeing? BFI coming back down. We did get a little pop when we talked about it last time. That was the ride up that we got, Chris. But guess what? We're actually below those price point when we called that little move up. Where are we going to with BFI, and what are you thinking about restaurants overall?
Yeah, I mean the reopening restaurants, I think, is still it's a tough to call market, right? I mean, Mitch, I know even going to like fast food restaurants, a lot of them are still closed inside, right? You're counting heavily on drive-through traffic, delivery traffic. And that was part of my thesis here with BurgerFi, right? Was they are catering to delivery. They're building their stores, they have drive-through lanes, catering to delivery, those third-party, services that bring food to your house. I still like this story. They have earnings hopefully in November. I'll be following to see what we get out of the company, right? How are the new stores performing? How are their old stores performing? And are they still going to continue their expansion of opening new stores this year, or has the pandemic set them back? The other restaurant reopening one, I saw someone mention in the chat, Mitch, FST.
Okay.
I don't remember who it was. So FST, Martin asking for FST multiple times here. So FST is the Fertitta Entertainment restaurants, right? So this is your Bubba Gump Shrimp, your Morton Steakhouse, a couple different chains.
Okay.
I like it. They're a little bit higher end price point, and they're as I just said with BurgerFi, right? This is the opposite. These are restaurants that rely heavily on dine-in guests. So I don't know if I love this one yet. They do own a sizable stake of Golden Nugget Gaming Online, right?
Did you say sizable stake?
Yeah, sizable stake. No pun intended, but Mitch, good call out. That was pretty good. If I would have planned that, I mean, they're a steakhouse brand. But the question for me is, they're gonna own. They're either gonna get cash or DraftKings shares, right? When that DraftKings stake goes through, I said stake again. So what are they going to do? Are they going to hold those DraftKings shares, or are they going to sell them? And if they sell them, what are they going to do with all that money, right? Are they going to acquire another restaurant business? Are they going to build out their own restaurants? Or is this a restaurant company that maybe could pay dividends in the future? So FST has been on my watch. It's a little bit pricey for me here at $12.52. I would have liked to grab this one at $10. But the reopening of restaurants, I just don't know, Mitch, if we're fully there yet until A, fast food places open indoors, and B, there's a worker shortage still, right? Restaurants can't hire people. There it is. Yeah, labor issues. So if you're a restaurant and you can't hire people, it hurts your customer satisfaction. It hurts your timeliness, right? And that affects your top line and your bottom line. So keep an eye out on this trade. Mitch, you said reopening. What about there is a merger vote this month for Vivid Seats, HZAC. Are we fully to that level yet where people are going to concerts?
What's the ticker again?
So HZAC. Horizon. Yep.
Oh, Horizon. There you go.
Yep. So are we to the point where people are going to concerts or concerts selling out? That's a trend to watch, right? We saw Live Nation shares start to run earlier this year on the reopening. Vivid Seats, they rely more on sports tickets than concerts. And Mitch, if you're following college football, I think you've seen that people, and pro football, right? That people are going to games. Those seats are full. So
slammed.
This is one that I'm watching this month with that merger vote. I wonder if we dip below $10 after the merger. And that's where I'll be looking, is to maybe get shares under $10 post merger on HZAC.
Yeah, definitely one that we start going back towards the trend that we were looking for. I would look for myself, Chris. And I mean, I myself already have looked up some tickets on Vivid Seats for coming up. I got the Nuggets versus Miami Heat coming to November 6th. And I'm trying to get front row seats, man. So the best way to do that is usually to scalp it off of a season ticket holder, right? I mean, you're not going to probably go straight towards the ticket, let's say Ticket Master, to try to get, unless you're going through their season ticket kind of resale. And so we'll see what happens with this one, Chris. I'll see if I get that dip down. I'll be looking for the same thing. All right, Chris, let's go ahead and let's talk a little bit more about some top SPACs that are out there. What are we expecting towards? So I'm going to go first, and I'm going to call out maybe one or two, and then I'll let you kind of call out one or two. First one I'm going to take a look at is one that I expect in the long run, just one that hasn't ever turned away. And so sometimes we got to find those that, I mean, I can clearly say I just don't expect it back down below $10 anytime soon. And if it ever did, I think we'd all go crazy at the opportunity. So let's take a look at MP Materials. Let's go to MP here. All right, MP Materials here. We are pulling back, so I will let you know. This one is on a big pullback right now, but I do like the chart, and that's why I'm starting to call it out here. So if we take a look here at the weeklies, I think we're heading back down closer towards this support here of 29, but anywhere between 30 and about 27.50. I do like this stock. It has made multiple approaches to break through 40, has gone to a high of 51.77, and I'm going to be looking for it to come back down to support here, Alt H for my Benzinga Pro users. And we'll look to see if it finds support somewhere there at 27.50, 28.15s. And then we'll look for that move right back up through 40s and continuing a move through 50. For 2022 is when I'll say that would happen. But I'll be looking for this to kind of transition into a support and then make its way back up towards the resistance. This is one of my calls, MP Materials. And I'll let you go with one here, Chris. What are you thinking? And then I'll drop in with one of my own.
Yeah, it's so tough to pick one. I continue to like TDAC, so lottery.com and sports.com. Mitch, I don't know if you've paid attention. I mean, I used to buy lottery tickets, right, for Powerball and Mega Millions. Powerball is at a record, right? What happens when these jackpots hit records? People buy a crap ton of tickets, right?
Yes.
So a company like lottery.com, I think that could really help their financials, right? Because as more people are buying tickets online, a major jackpot like that is a big catalyst for them, right? It's a positive. People are going to buy lottery tickets. Maybe I even, take a dab at these lottery tickets with Powerball at highs. But this is a company, again, online lottery, and they own sports.com. We saw what just happened with Fubo, right? Fubo shares had gotten slammed, but they launched that sports book and finally started that sports book integration, and shares started going up again. That's what happens when companies that say they're going to do sports betting start to do sports betting, right? It's a major catalyst, a major win. So once lottery.com actually announces their sports betting plans and starts them, I think that's a win and a catalyst here. So TDAC, I continue to like.
Yeah, keep it on and watch. We'll see what happens if it gets out of this 13 to 11 range. It's just stuck in that range. I would like to see it break out of that range and see it get that upside look. We'll see what happens with that one. And next one to mention, and I mean, man, it's a hard one to mention here, because one thing that you're starting to see is that you have a lot of these EVs and these LiDAR ones that look good and all of a sudden turn back around. Like for a while there, I was starting to think, oh, well, LAZR, right? And then if you look what happens, we're still getting that red monthly candles, right? I've been waiting for these to turn around. These are definitely on my radar for the next year. I can tell you that right now. That's what I'm trying to do. I'm trying to look further out in time, and I'll come back to them at that moment. But for me right now, one of the things you got to look at is what can happen going into the end of the year. And so, with that being said, I'm just going to stay on what some sports plays. So, I actually just went after SEAH. This is going to be one that I'm going to take a shot on. Why? Because I've been seeing the volume come in it. And if I see the volume, you guys know sometimes I try to follow the volume here. So, this is what I'm seeing here sideways action, trend line coming back down. And you guys know how I like to draw out here. So this is what we're seeing right now. We've seen multiple pops trying to get above, and even a pop that went above never closed above. So that's the next thing. We could see pullbacks to even, let's say, 987s. That's kind of the line in the sand. If it breaks that, it could go down towards 970. But we want to see a nice lift above 1030s and a big push through 11s. I think that you need to see some news come out for this to happen. But for some reason, last week, we started really getting a lift. If you can see right here, it just trades 200,000, 300,000, 500,000. Then all of a sudden, we start going to 900,000, 1 million, 1.5 million, 3 million shares traded. That's when I started getting interested in this one, and I took my shot in SCAH. We'll see what happens from here. If it does break the 987s, I'll probably be stopping out. I actually have a stop place right now at 980s. Why? Because if it does go down there, guess what, guys? I don't want to be caught with the bag. That's not what the idea is here. The idea is for the stock to make a rip. If it doesn't make the rip, you got to go ahead and know where you're going to sell it and get out of the trade.
Mitch, I hope the chat's ready for this, because I can say that I also went long SEAH last week. I was able to grab shares at $10. I love that price point, right? $10 floor here. Sports betting. I mean, this is Supergroup. This is Betway. They have not completed the merger yet. There is not a date. So this is in my IRA because I think we're going to take a little bit of time here, right? We need to get through the merger. We need to get changed over to the new ticker, the new name. So I'm holding for the long here because I think once they are a pure play sports betting company, there is huge upside, right? Look at other sports betting pure plays. Look at Rush Street. Look at Genius. Look at DraftKings. None of these come down below that $10 price point, right? They all trade higher. Golden Nugget right there. I mean, people want pure play sports betting companies. It is a high growth area. Once SEAH completes that merger, I think those shares are going to be very attractive to people. They have strong relationship with the NFL that we know very well from having Eric on our show. So, Mitch, I like SEAH. I also like the other sports betting ones, right? I don't know if you saw this, Mitch. I mean, I know I was hoping the Buccaneers would cover the spread last night, but 90% of people bet on the Bucs to win by 7 or more points, right? They didn't. So what happens? Sports betting companies cleaned up, right? They made so much money this weekend because some of the favorites that were heavily bet on lost or didn't cover the spread. That's a win for sports betting companies that already have these razor thin margins, right? Because of your customer acquisition cost. If they can put together some big weekends like they had this past weekend, I think earnings could be real good.
This is what you always got to look out for, guys. So we're going to be watching DraftKings to see if it holds its support. Always draw some lines. Draw for yourself. See where you expect stocks to hold and go back to seeing what happened at that point. Last time we got towards this point was right around here, around the 43 mark. We recovered up towards the 51s, 52s. If you guys remember, this is where I traded it at, was 51s. It eventually went towards the price point that I was looking at, which was a $60 price point. Then turned around from that 64 high. What we're going to look to see is if this one can find that weekly support. So it's coming right into that, going to run right into that around 47 or 46. I'd be looking for this to turn back around on the upside. If not, it could head down towards a major support going down towards 40, but I don't see much lower than that. RSI is one that I do see can pull back right now, Chris. Now, be careful with this one because we've seen a massive run up. So what I'm looking for RSI is either they get the news and the stock goes slightly above, maybe to 22. I could see them getting that news acquisition. Let's see what happens. If news comes out that there isn't going to be a deal, this one could also come back down, I think, closer towards 17 and 15. If it does get to 15, I'd be interested again to get in this one. As you guys know, I sold this one at 14. Still to this day, like, should have got back in at 11s. I was looking for 11s. It went to 12 and went right back to those levels. We'll see what happens now that we've gotten it to do kind of these 3 pushes. I always look for like the drives. Look how this one it drove up here, it drove up here, and then it drove up right here. I think maybe you get one more drive towards 22, but after that you should see a little bit of a pullback. We'll see if it gets back towards somewhere in this $15 area.
That's a great call out, RSI, Mitch, because when you look at that chart, a lot of that valuation in the recent run-up is baked in from an acquisition, right?
It's already baked.
What happens if they don't get acquired? Or, I mean, again, I think they get acquired, but the question is how quickly. We're in the middle of the NFL and college football season. To me, I think an acquisition would have happened before that, right? You want to close that deal before these major sports betting events because you want that extra, catalyst. If a deal gets announced now, I just think it kind of takes attention away from whatever company acquires Rush Street, right? So unless if it's a company not already in the sports betting space, so maybe if remember how ESPN wants to get into sports betting, what's the new Fanatics, right? If it's a company like that, I could see the play right now. But for a DraftKings or a Penn or someone like that to acquire Rush Street, I just don't think it's going to happen right now in the middle of the football season. Again, that's just my opinion. But I think, as Mitch said, we could see a pullback on RSI because a lot of that is baked in already. And I just don't know if we're going to get an acquisition this quarter.
All right, one to call out that I might take a shot on, Chris, just because I could get my $10 back is BHSE. Why? Because, I mean, we're starting to reach that year point, right, Chris?
Yeah, BHSE. I actually own warrants in this one, I think, Mitch, because they were super cheap a while back.
Yeah.
I mean, this is a company looking at the sports industry, and it's, sports franchises, sports entertainment, media, sports betting. It could be any of those. But yeah, the deadline, I'm not sure. I'll have to do some digging to see. But it has been around for a while, so good call out there.
And again, it's the 17th of December. I mean, we'll have to verify that, but I believe it would be the 17th of December. And so you're talking about what? They got a 2 months, a quick 2 months to get this done. We'll see what happens here. But I mean, I just always look at these as if they're under 10 and they haven't talked. I mean, why not take a shot, right? All right, let's go ahead. We'll be wrapping up here, guys. Like always, you guys look it up. We'll see what happens with the maps. Maps is interesting because it's been holding the 14 support. We'll see what happens in the cannabis industry. I know there was talks last week and the week prior, I think, about, of course, the banking and kind of how they could be thrown in with another bill. Look for that. News for that to come out. And guess what? Maps will start moving. I'll tell you that much. We'll pay attention towards this one. Looks like it's created a really good bottom at 14. We could see it rip through 16 with good catalyst. Let's pay attention to this because if not, I mean, hey, next thing you know, it's at 18. I'll keep watching maps too. It's actually getting interesting for me. I like that chart, like this bottoming action multiple times to break down. Big volume coming in. We now got slightly above that, holding it sideways. It looks like someone is in here and looking for an upside move in maps. All right, that's going to do it for us, Chris. We're at that 12 o'clock hour. That means up next, you got the power hour coming into this. Up in the power hour, you will get an IPO review. Guys, stay tuned. Matt Hammond, I do like to see his IPO reviews. It also is from IPO Warriors, so you guys check that out. That's going to be in power hour. Anything you want to leave us off with, Chris?
That's it. We got some interviews later this week. We're happy to be back. So everyone stay tuned for Power Hour and catch us tomorrow, 11 a.m. Eastern time.
All right, guys. The last thing I want to leave you off with is some education. If you guys want to learn from the guys on Pre-Market Prep, they are having an event on the 16th. Yes, I said it, guys. The 16th of October. Learn from the best on Pre-Market Prep. Get ready, Pre-Market Prep Plus.
So here it is, trading from relationships.
Talk pairs trading, sympathy trading, risk arbitrage, and then we'll even talk to social media.
This is your chance.
Be there.
How to increase the odds.
We're going to dive deep into relationship-based trading, pairs trading, sympathy trading, basket trading, risk arbitrage.
Then get ready for the event on October 16th. You guys think we're fired up on the Pre-Market Prep Show? Then be there October 16th for Trading from Relationships 2.
We're still live. It's taking forever. We're never going down. Hit the thumbs up. Let's keep it going. Looks like StreamYard doesn't want to take us down. We're not leaving.
That was
We're
an exciting trailer.
leaving.
Maybe that's why. That got me pumped.
Look at that. Are we even down? I don't even think we're down, Chris.
We're not down. We're still live.
StreamYard wants us to keep going. It
Still
says
live.
trouble connecting. It says no, you're not getting down. It says we're not leaving, bro. We're not leaving. Well, guess what, guys? If you guys wanted to get to the power hour, I don't think you can because I'm not allowed to take it down now. StreamYard said no mas. You stay on. SPAC's attack. Well, Chris, if you need to hop on out of here, go ahead and hop on out of here.
Do you want me to try to end it? You want to see if it's your end?
Go for it.
Let's see. Maybe
you can do it. Maybe you can. I can't do it.
Oh,
Hey, there's a first for everything, right?
doesn't
gotta
look like
enjoy
it's
it.
working on my end either.
We are live, baby. Live, baby. Can't get down,
An
but
error
we are live,
occurred.
baby.
Wait a minute, then try again. It says Mitch. Yeah, it. They want more and more of us, I guess. So,
I'll just keep it dancing, Keep a little swag going here. You guys out there, come to Money Mitch later today at 4 p.m. I can keep it going, man. We got this. You guys can find out how I got stopped out of my swing trades from Friday. And you guys can be like, yo, Mitch, you don't know what you're doing. And I'll be like, I can't really say I do today at least. But hey, that's the way the market crumbles. Sometimes the cookie crumbles in your favor. Sometimes it doesn't. That's why it's a game of probability out there. Let's see if I can end the broadcast now and take you to the power hour. If not, guess what, guys? I think you're just going to be here all day. So,
Mitch,
got
you
no
know
problem
what?
with that.
I am now seeing reports. It looks like Facebook's down, Instagram's down, WhatsApp's down. A bunch of websites out there are down.
Nice.
So maybe this is connected to that. I don't know.
Nice. We are rocking it here. So this is what I'm going to do. Chris, you stay here. Hold the stream down. I'm going to go over to the power hour and tell them to get on this stream because
I don't think they've started up yet. So
yeah, I don't think they can start. So I'm going to tell them to get on this stream so they can keep it going. You guys just stay right here.
Oh, there's our man
Hey.
Spencer. There he is.
Wait, what is going on?
Oh, we
we
broke
are
it.
in the Matrix. If you know, the Matrix is coming out in December,
Yeah,
and we just broke the internet.
yeah.
So-
I was talking to myself for 3 minutes. I thought I was live, and I
Oh,
wasn't.
I bet it sounded good. I wish everyone could have heard that, Spencer.
I had an audience of one. It was Matt Hammond, who was backstage.
I hope it was recorded.
Hammond, at
Maybe
least
we'll
we had to
release
Hammond.
that.
It was not recorded. So I couldn't go live, and you guys couldn't hop off.
Yeah, we can't end it. It
All
will
right.
not let us end the stream. So
You know what? Might as well just stay here then.
just take my
Screw it.
stream, bro.
Screw it. I'm going to
Keep
take
it
it over.
hot.
I'm
Just
going to
keep
take
it
it
hot,
over.
bro.
All right.
On over.
All right.
awesome.
See you, Chris. All right. As I was saying to myself moments ago, welcome to the Power Hour. I am in charge today. Luke is out. Aaron Bree's out. So what my original plan was to do a combo stream, Power Hour, get technical, but because StreamYard is in the Matrix anyway, can take over this stream, and that'll be the theme. So what we're doing is we got Matt Hammond here. We're going to talk IPOs in a second. Then at 12:30, I'll have Christian Fromhurst from Tribeca Trade Group going through his charts. So screw it. Let's just get into it, and let's start the Power Hour show, shall we? I said let's start that.
Let's get ready to rumble!
Benzinga Nation, jam-packed show today. Peloton up 5%.
It's
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna. The best trade idea resource out there.
All right, there's Matt Hammond himself.
Hey.
All right, you have some gremlins today, Matt, but we got you. That's all that matters.
Hold on, I gotta turn off the. Okay, sorry, we had a little bit of confusion there. Can you hear me now?
So much confusion today, Matt. How's it going?
Doing what I can in this market to keep optimistic and out of margin calls, but not
yes.
too
General rule of thumb is
dangerous,
stay out of margin calls. That's a good idea.
You got to keep some spending power for these IPOs. IPO warriors got to have ammo for the funds.
Yeah. So here's here's the market today. You can see it's mostly red with a couple of exceptions. My portfolio not doing too hot, but I'm not panicking at all. Why don't you bring up your screen if you can, Matt? And
sure.
We do have some IPOs this week. I know we got a couple big ones tomorrow, I believe, and I believe Thursday. A couple on my radar, but I want to know how your week was, and then I would love to get your thoughts on what is to the calendar this week. So I guess we'll start with last week's trades, right?
Yeah. So last week I actually kind of sat on the sidelines because there was a lot of unknowns, and in general, if I'm not at least fairly confident, then I'm going to be watching and taking notes. This has always been a bit of an evolution. The process has been certainly effective and very profitable for me. But one of the things I've learned is don't force yourself to make trades just because it's, exciting and coming off a huge week. The week before HLTH, about a week, the Friday before last week was a huge win. And I just have to kind of mentally check myself and say, hey, you have this tendency to take one big win, feel invincible, and then start chasing everything. And sometimes it's harder to sit things out when you're not sure after you've taken a big win, and then you kind of get yourself into trades that normally maybe you would have seen that they weren't that exciting. But there were some pretty good opportunities. Only one, two of them that turned out to be winners were the only two that sort of looked good to me, and they weren't phenomenally good plays.
Yeah.
And some of the more popular IPOs weren't that great. I'm going to take a look at those as well. So I'm happy with my strategy for waiting out, being patient, buying the dip on other plays, but that gets tiring when the market doesn't rebound. So again, trying to say to myself, what is the strategy for the next month or two? Well, I think things will come back, at some point in this month and rally into November and December. So just don't hurt yourself right now. Don't get yourself overextended. Don't put yourself into a margin call. Don't do anything that's going to wipe you out. Play smart, play safe. And that goes for my IPO trading as well. So the theme for this week is we saw a pretty big contrast in the debuts we had direct listings and we had high float versus sort of low float. And as we've seen again and again and again, high float just doesn't translate into a good debut play. I'm not saying it's a bad company. I'm not saying it's a bad time to take a starter position for a long hold, but I'm really about trying to play these for profits in 1 to 2 days, maybe 3 days. Otherwise it turns into a bag holding position. And I'm just not going to go near anything that has a float over, say, 40 million shares, because time and time again, we just see that that's too much supply, not enough demand. And especially in a cold market where people aren't buying, we're not seeing a ton of volume on the buy side in the market. That's not a good time to try to play against the trend that's been working for me. So the plays that did work were Amplitude was the first IPO of the week, and it was a direct listing. And for a direct listing, the float was like 35 million shares, which is pretty good. It opened at $50 and pretty much went straight up. So this is the kind of play that I would have liked to be in. The market was cold. It was a direct listing. I just didn't have a great feel for it, and I wanted to play things a little bit patiently, so I missed it. But in retrospect, I might have played this if the market were stronger and you miss some. That's okay. But this is exactly what you're looking for. You're in at 50, spikes right up. You can take half your position out on the initial run. I would like to usually play this with a trailing stop loss. So, maybe when it, as it gets over 51, you set your stop loss at a base of 50.50. If it doesn't, continue up, you get stopped out for what I would call a non-loss, a slight win. And if it does run, you just, every time it breaks through $1, you bring it up to, breaks over 52, you bring your stop loss up to 51. It breaks up to 52.50, maybe you come up to 52. I mean, I love being in this kind of trade because there's no heat. It's just, you're straight up, and eventually you get stopped out probably maybe 54, 53.50. That's a good opening win. Take out half your position. You're already, winning, and you can kind of let it run for the rest of the day. What you're expecting or you're hoping for is one of these end of day kind of moves up. And we've seen time and time again in the final minute, a spike. And this spike, I like to set, I might, if I had been in this, I'd like to think that I would have set a limit order at, say, 54.95 or 55.95 and let it get triggered on the, in that right before the closing bell. This was a pretty, solid stock going into the close. So if you have to hold it into after hours or day two, okay. But this was, I would love to have been in this play because this is exactly the kind of play that is very easy to trade. Excientia, EXAI. I did take a play at this one. I got in on the debut and let it run up a little bit, but given the market conditions and that this is a little bit too similar to some of the other AI-driven drug discovery platforms, I didn't want to take a loss. I didn't want to be sitting in anything. So it opened at 27.15. Once it moved up to about 27.50, I put my stop loss at 27.25 and ended up getting taken out right before it ran. I'm okay with that. I didn't have a lot of conviction in this one. So I basically said, look, if it goes straight up, I'll be in it. If it doesn't, I'm just going to get out and put my money, take my money back. Tiny win, nothing to cheer about. But if you did stay in it, if you like this stock and you set either, a trailing stop loss, maybe you got out at 29 or 28, nice little win. If you, the other strategy here is to say, okay, well, stocks that open it or IPOs that debut at around 27 often peak at 29 or 30. Those are kind of the two resistance levels that we see. And you'll see this one hit resistance rate at 29 off the first run and had enough power to actually push over 30. So if you put your stop losses at 28.95, 29.95, not stop losses, limit orders, and those get taken out, great. You've taken a nice little $2 or $3 play. So again, this one gave you a nice comfortable run up. You didn't want to be into it too long. Didn't give you that end of day run. A lot of times what I look for is, if you look here on amplitude, it peaked and then held this like baseline. Once it holds that baseline for, a good hour or longer, that to me is a strong indication of a day two or an end of day push. If it baselines, if it's not a flat baseline, it's more like choppy like this, I'm not so confident about an end of day run. This is not the kind of flat baseline that I like to see. Even when it drops, sometimes it'll baseline before run. That baseline that holds, that to me is a good indication of an end of day run. This kind of like up and down, trading in a range, not as strong of an indication. If you did hold, if you sold half out here, maybe you give it to VWAP, maybe get taken out here. You had lots of opportunities to take profits and let it run. You've already taken a nice little win here. You're not going to get rich off this trade, but pocketing these little $1 to $3 trades, if you're trading with, no matter what, what your volume is, you're going to incrementally, grow your stash. But for me, a half position is about 500 shares. A full position would be 1,000 shares. So if you're taking, 1, 2, 3 points off 1,000 shares, you're putting $2,000 or $3,000 into your account, and you stack up, 4 or 5 of those in a month, and you've made a good little, income. First Watch Restaurant Group. I said I wasn't interested in this one, and I don't mind that I missed it. It did turn out to be the best IPO of the week last week. Opened at 21, was a little rough out the gate, but the low float. This was I think, back in my notes, this was 9.4 million shares. So again, low float, means a lot on these plays. If there's any kind of demand, not a lot of stuff going on in the market. People said, okay, well, low float IPO, I'll play it. And maybe for some people, it's their favorite breakfast or lunch place. I've never heard of it, but it did go up. Maybe people were comparing it to Dutch Brothers. I don't know. But it did go up. It gave you a 10% win on day one if you kind of nailed this peak or hit 23. Again, that $2 move. It debuted at 21. I'm looking for 22 or 23 for a quick kind of like relatively easy win. If you did really believe in this and held through that day two run, somehow it got media coverage or something overnight and ran up to 25.46 this morning, which would be a 20% win. It's a pretty hard play to make, especially, for me, I don't know what this company, I don't know much about this company in terms of, I don't have any brand association to it. So not an easy one to catch on to. Some people probably did and did well on it. And this was just a good example of a low float IPO that, did pretty well. And I wanted to go over, because there were two high float IPOs that give us something to learn from, why high float doesn't run. For me, high float is 40 million shares or more. It has to be really, really strong to push more than 40 million shares. Average float is about 30 million shares. If it's a good company, a solid company with 30 million shares, I'll say great, play it. If it's a strong company, if it's kind of a strong niche company with 20 million shares, I'm more excited about it. When they do anything under 10 million shares, I'm going to pay attention. If it's not like an obscure biotech, there's a pretty good chance that you're going to, I would say a better chance than not that you're going to get an upward movement on demand. And if it's less than 5 million shares, it's almost a catalyst in itself, because IPO traders are like, well, 3 million shares, how could it go down? Of course, sometimes they do, but more often than not, at some point you get a pop. So the reason is very fundamental, supply and demand. If you have really high supply, you need even higher demand to make the price go up. So if you have a lower trading volume to the float ratio, then that's even worse. So you want the volume to be high compared to the float ratio. So if the float is 5 million shares, you don't need a lot of trade volume to make it go up. But if you have a really high float, you need a lot of volume. I mean, Didi was such an obvious, before the Chinese, it was 300 million shares. I think they upped it to like 330, and some of the, celebrity pundits were out on, NBC going, oh yeah, buy all that you can. And I'm going, no way. Don't buy any of this.
Bottom line is, as you see it, the higher the float, the harder it is to move the stock. Well, that's usually always how it goes.
And it's one of those, it's almost self-fulfilling, because, IPO traders like me look at that high float and go, nah, so that automatically takes out people who would otherwise try to flip it. And two examples we'll look at real quickly are Warby Parker and Olaplex. So Warby Parker got a lot of coverage. This is that direct-to-consumer eyewear, and there was 77.7 million shares, and it was a direct listing. So it opened up here at 54.11, kind of tried to get going, but there's just so many shares, and it just can't move up. It'll move down before it moves up. And it kind of held its own, moved sideways, but you weren't going to make money on this trade. And if you didn't sell, you're kind of stuck bag holding into day two. Now it's kind of come up, and it's a direct listing, so we think, oh, the pricing's probably more fair to the retail trader than a direct listing. But it's a huge volume in a cold market. Maybe this goes up from here. I would, if I had to, guess, I would say, yeah, sure. Maybe a better chance that it goes up a little bit than down a little bit, from here over the next weeks as the market returns and people go, oh yeah, Warby Parker is a solid business model. But it's not an IPO play for me. Olaplex is interesting because this is a very solid company in terms of growth, something like 400%. Revenue growth or profit growth, I forget which one that was, but was getting a lot of hype in social media. A lot of people are going, this one's a great company, I love their hair products, it's amazing, they their numbers are so much better than L'Oreal, which they are, but it's they upped it from 67 million shares to 73 million shares, and that's just too much. I mean, there's just no, it actually managed to kind of swing here and opened at 25 and gave you a chance to kind of you had to be real quick with it, but it did swing up to 26.50. But that was kind of the day traders and the hype traders who were trying to pump this and trying to get people excited about it. I know that there were trading groups going, we're all buying Olaplex, who's in? Me, yeah, let's do it. And I'm like, yeah, but there's not, how many of you are there? There's not enough. There's more shares than there are buyers. So even with strong demand, there was more supply, and we saw the effect of it. It just, high float debuts, they just run out of steam. We saw this with things like, Palantir on the initial day went up from 10 to 11 plus, and then just Uber 44. I think opened at 44, traded up to 45, and then down. Coinbase was like, opened at 385, went to 430, and then just finished at like 355 or something, and then it was just down from there. So high float, even if it's a hype name, even if there's a lot of brand recognition, high float almost never works. I struggle to think of one that really worked well. So to me, over 40 million shares. If it does go up, I'm okay with missing it. It doesn't fit the pattern that I'm looking for. I can't play with a lot of conviction to begin with. So it'd have to be something really special. Maybe if Stripe, when they debut, has 40 or 50 million shares, I'll say, okay, whatever, everybody's going to buy Stripe. But, in most cases, it's a red flag. Okay. This week's IPOs, we'll just skip the list and jump into them. iFit Health and Fitness. This is the company that makes Nordic Track, Proform, Free Motion, Weeder, and they have a subscription-based kind of workout content from home type of setup. So the obvious comp for this one is going to be to Peloton. And even though Peloton's products, I'm not going to get into which is better, why they're different. I, for the life of me, have struggled to ever make sense of a Nordic Track.
There was a article in the Wall Street Journal, I think on Friday, just all about Peloton fatigue, right? Everyone bought one, and now they're not using it.
And that, they make a great gift, and like New Year's resolutions and Christmas, I'm sure people buy them and all that. But, I work out, I go to the gym, I do my running. I've had weights and stuff at home. I don't need to spend that kind of money to get active. I don't know I'm sure it helps other people. They do have 6 million members and 1.5 million active subscribers. Their revenue's up 104%, gross profits up 120%. So maybe it doesn't matter that people don't use them so much unless subscriptions really are a bulk of your business. If people are buying them, that's great. And they are pricing this IPO at a 43% discount to Peloton based on sales and an 82% discount based on EBITDA. So I think that, as sort of a, Peloton has been one of those hot, almost meme-ish stocks, and that sort of association with this kind of valuation makes me say, hey, this could be one of those IPOs that does pretty well. The float's standard 30 million shares. I will probably watch it to see how many people are talking about it, if they increase the float or increase the, how high it debuts compared to the IPO price. But it does have that brand name recognition. It does have that chance for a day two media run. And if the market starts to warm up a little bit, by the middle of the week, this is something that I'll have my eye on and maybe take a half play or try to undercut the debut bid and see if this gives us a chance to take a few points. So kind of like this one. Don't love it. Healthcare Triangle Group. This was rescheduled from last week. It's cloud and data management software for healthcare and life science organizations. We've covered a lot of IPOs that kind of sound like this. The revenue is just up 20%. In the last 6 months, gross profit up 32%, which are good numbers, but not great for like a software IPO, not red hot, not screaming, hey, you got to play this. And with an operating loss, negative net income, negative cash flow, those are sort of warning signs. We tend to like playing the ones that have either swinging towards or moving towards, positive numbers on these three. And, the only thing really going for this one is the low float. You got 9.1 million shares, and that oftentimes is enough to get things going. So kind of have to watch this one, but I don't love it. And right now in this market, I'm sort of, playing cautious rather than playing aggressively. So if I was being aggressive, maybe I like this one. For this week, I don't know. If I miss it again, I'm okay with missing them. I'd rather like really nail the winners and miss some of the okay ones. And once in a while, you're going to miss a winner and play something else that's still a winner. Lifetime Group Holdings. Interestingly enough, we have another health, fitness, and wellness.
All right. How many of these could we have, Matt? This is getting ridiculous now.
We are getting a lot of healthcare. We are getting a lot of fitness.
You know what?
We were getting the barbecue grills like a few weeks ago.
It's because they all saw what happened at Peloton, and they're all chasing that.
Yeah, and they probably also realized that now is the time. I think that some of this is
now, like 6 months ago was the time. Now,
well, now is the 6 months ago was the time for them to begin the filing process. So now they're getting to the market, and they all push things back when things were cold in August, and I mean the market was kind of cold in August, and a lot of IPOs got rescheduled. But this was formerly a public company. They're basically like high-end gyms. And they own like 125 gyms around the States. And actually the insiders bought it out at a 73% premium to take it private in 2015. The numbers were starting to look even better in 2018, 2019. And then COVID hit and they got smashed. And the only kind of angle that I can see to this one that makes it, if I were to play devil's advocate, is say, well, a lot of gyms went out of business and these guys held on, and now they're raising a bunch of capital. So maybe they're the best positioned gym, especially luxury gym, for the reopening opportunity. I don't know what they're going to have to do about people who, bought 2-year memberships and couldn't go to the gym for 6 months, if they're going to be reimbursing them or extending them for free, or just saying, well, tough luck. It's hard for us too. The thing that makes this just not interesting for me is the 46 million shares. That's kind of like, could have just skipped to that.
That's not even that high. It's maybe a smidge above.
40 is my number.
It's above your number.
Over 40.
It's above your number.
40. Let me put it this way: it has to be a really compelling sell over 40.
Okay.
And
all right, fair.
High-end gyms is not really compelling to me. Like, are you excited to go out and buy this?
No, not. Not at all. I agree with you.
Okay. Singulate, improved drug delivery technology for ADHD treatments that are already approved. So they take treatments that are already approved for, attention deficit disorder and improve the delivery technology. I don't know, 4.6 million shares. Maybe it's a low float target, but I don't know. I think that ADHD, I don't know, don't most people either take an inhaler, take a pill? How much, it's not like people inject this, right? So how much, I don't get it. Biotechs, I tend not to play, and this one doesn't sound particularly exciting to me. I'm going to say the same thing for this one. Theseus Pharmaceuticals, preclinical cancer, focus on gastric cancer, 8.3 million shares. I don't know. Pharmaceuticals, I'll just touch on it really quickly. The reason that I generally won't touch them is they are a long way off, especially if they're preclinical, from any major catalysts. Dilution is imminent as they, hit targets, and they're very binary plays that take a long time to play out. Either they get approval and they go way up, or they don't get approval and they go way down, and you're waiting a long time either way for them to go anywhere. And once they do go somewhere, they're probably going to do a follow-on offering for the next level. And then you're sort of sitting there, and I just don't see I haven't had a lot of success with them. And every once in a while I'll talk myself into one. There are some this week that maybe I will, and sometimes they work out, but more often they don't. And then you're stuck in something with very low volume, tricky to get out. I don't like them. Volcon, this one's interesting. Electric power sports vehicles. We're talking electric dirt bikes and ATVs. They're not street legal, which is one of the things they're kind of like
street legal.
But they are like they're like for farms and for off-roading, and they've gotten a lot of press, like Barron's, Newsweek, like Auto World. Their press section on their website. Their website is very basic, which I don't love, but it's not terrible. But they're really low price points. They have two electric dirt bikes right now. One is 8,000 and one is like 2,500, and they have a pretty good range. They look pretty powerful and fast. They're kind of cool looking, and the story might be good enough for 3 million shares to give it a pop. This is the kind of IPO that the IPO day traders and the trading groups kind of key in on. So 3 million shares takes almost nothing for this to move up. So if it starts at $5 or something like that and goes down at all, You add a little bit more, you start a position down there, and then people start the social media, watch Twitter. If people start talking about it, it's going to go up. It's going to have at least one spike. So I watch these because I've done really well on super low float, and this is a very low float, just 3 million shares. Almost all the super low floats that aren't, and even a lot of the biotech ones that aren't biotech, even Easy Fill, which was like that delivery gas system, had a decent pop, which is one of the, I don't know, to me it sounds like a really unprofitable business. But these guys do have, they are accepting payments for pre-orders, which is, which is more than a lot of EV companies can say. So, I like this one, or I'll at least start a position on this one on the debut and see what it does, but give myself some room for doubling down. But these low float, interesting story debuts almost always have at least one kind of very fast spike in them. So as long as you're ready to take profits and don't get too greedy, these types of plays have worked out. Isoplexis, ISO. This is a medical device manufacturer. It sounds pretty cool. It's way over my head, but it's single cell analysis, and it's used by the top 15 global biopharma companies based on revenue and nearly half of the comprehensive cancer centers in the US. So it is, when you see these medical device, we had that other one last week. It was that we called out. It was anyway, I don't want to forget which one it was, but we liked it and it did really well. And part of it is they have like consumables. They have the trays that they use, for example, for the testing are single use. So they have this kind of recurring revenue. The total addressable market is $34 billion. Revenue was up 103% in the last 6 months. Gross profits up 112%. So they're good growth numbers, but their operating profit is also expanding, or is like the loss on their operating profit is also expanding and is pretty significant. So it's not without danger, but it is low float. And that to me adds up to something that could be pretty interesting. I think I will, again, maybe take a half the play, maybe undercut the debut. I'm not going to go too aggressively on this, but it does sound strong. It does sound interesting. And that often is enough when the float is just 8.3 million shares to give you a good opportunity to grab, a 2-point, 3-point win. And the one thing I would say is any kind of biotech play, I will not want to be holding onto it into day two. They just kind of get forgotten about, volume dries up, and you're sitting there, just struggling to get out with a huge spread between the buy and the ask. Even the spread can be the difference between losing money or making money on the trade at any given time, and I don't like that position. Cognition Therapeutics. This is an Alzheimer's and macular degeneration drug. So they have compelling early stage trial results, and Alzheimer's has been one of the very few, like cancer drugs are a dime a dozen, and there's nothing to differentiate them in most traders' minds. But Alzheimer's, for some reason, has been a really hot trend. So you got a promising early stage Alzheimer's drug with a low float. It's kind of like, if I'm going to break my rule about playing biotechs, especially pharmaceuticals, this has the pieces that I would be looking for. And it's really a question of, are other people talking about it, or does this go under the radar? No one else is talking about it. I don't know. But we saw things like RNAS a few weeks ago, which was a low float, something cancer related. And it went on a couple days of really strong runs and rebounds. So low float, Alzheimer's, compelling early stage trial results, that might be enough of a positive story for trading groups to buy in early, pump it, and dump it. So again, I'll play it. I won't hold it long. I will definitely not be holding anything into day two. And just kind of pay attention to these, because you will notice trends in the in the different IPOs, in the different market types, and there are some patterns within biotech and pharma. Even though as a group I don't like them, there are some things which would indicate a win opportunity. Pyxis Oncology, preclinical novel antibody conjugates for lung and breast cancer, also discovers monoclonal antibodies. So that part is the interesting part, because anything COVID related like monoclonal antibodies has done well. They have licensed 2 proprietary product candidates from Pfizer, which kind of shows that they are playing with the big boys. The float is pretty low, but I don't know if monoclonal antibodies and the low float together will be enough. It's Friday. There's other plays that I might like better, but I want to watch this and just see what it does. I probably won't touch it. I think it might do well, but that's not enough reason for me to jump into it. There was something a little bit kind of in the vein of things we've talked about before, and this is a little bit out of left field, but we talked for a while about stealth IPOs. And stealth IPOs are these low float. Spencer, you know what I'm talking about, right?
I know exactly what you're talking about.
We're talking W&W, UTME, MITQ,
And then fast forward a day or two later, and it's like the number one like most traded stock.
Exactly. These IPOs that you never heard of, they were purposefully unpromoted. Some random Chinese company debuts at $5 or $6, and then all of a sudden is up at $30, and you're just like, what is this? What are they selling? And it's some random, like EJH was home cleaning services. And they come back down, almost as fast as they went up. But they do these random pump spikes, and all the investigation that I've done and everything that I've looked into on these has narrowed it down to a few possible answers. And the most likely one is that they are scams to move money out of China into Western markets. You're a rich Chinese guy, or girl, you got a ton of money locked up in China. It's very difficult to move money from China to America, especially under this administration. But one of the ways you can do it is give a few million shares to your cousin in New York, and just buy as many of them directly from him as you can. And by pumping up the price, you can move a lot more money a lot faster, and no one else is going to buy, Chinese cleaning companies shares for $30 a share. So you're going to be able to buy a lot of them and move your money from your account in China to your cousin's account in New York. And these scams, have taken on a number of different, iterations. And one of them was, we saw towards the, right before the Chinese lockdown, was that they were running up the price in the pre-debut. So they priced the IPO at $5. I think JZXN was kind of one that we really noticed. It was priced at $5 and debuted at $45. And there's nothing interesting about this company. And the only person who would possibly pay that kind of money was somebody who was trying to move money from one side to the other. And, that flow, that opportunity got cut off when Chinese IPOs got stopped. And so what did we see? We saw the main underwriters that we've seen doing these are Boasted Securities, Sutter Financial, which is a sister company to Boasted, and Network One Financial, which has done, co-underwritten some of the same IPOs, uses the same lawyers. So they all, they kind of seem to be operating in a sort of cabal. But if you remember a couple of weeks ago, we saw FCUV do an uplisting. And FCUV was some kind of 5G chip thing. And I didn't pick it up until afterwards, but you look on their website and you go to the team page, and it's 3 Chinese, doctors and, or electrical engineers or something. But, if I had made that connection, I said before, we covered it on the show because it looked interesting because it was a Boasted underwriting. We said, keep an eye on this. Let's see what it does. If I had made that connection to China beforehand, I would have, been more aggressive in playing it. But FCUV debuted, uplisted, traded pretty much sideways the first day, and then on day 2 went on a 500% run from about $6 to 25, to 25 plus. And afterwards, like, oh yeah, I mean, we knew something might happen, but something totally did happen. So after that, I said, all right, I got to keep an eye on anything Boasted touches related to a Chinese company. My hypothesis is they're going to go back to one of their previous stealth IPO partners and do some kind of follow-up offering or an uplisting. But I was looking specifically for a follow-up offering, something that looks a little bit weird, some kind of totally random company. and they're going to do some kind of offering because they have clients in China that are now more than ever desperate to get money out of the PRC and into the Western markets. And this is one way that I could see them doing it. So last Friday, I got an alert saying Bosted Securities is doing a direct offering with PETZ, which is some random Chinese pet food company that has a history of irrational runs. This company, when it did its IPO in 2017, going back and looking at it, looks like one of the original stealth IPOs. It IPO'd at about $5, $6, and within a week was trading over $30. It then came all the way back down. So, clearly an unjustified run. And then in February 17th, 2021, it spiked from about $2 to $3 the day before, and then ran up to 14, and then pulled all the way back down.
Yeah. So
that's two. You look at it, and it's done a few random spikes up. It's generally traded between $2 or $3, and then randomly spiked over $4. So this.
Okay. Do we lose Matt? That would make sense.
What's that? I'm here. Hello?
Okay. I thought we lost you. It would make sense because we were having all kinds of technical problems today, but we got you back? No. We did not get Matt is frozen. All right. If Matt unfreezes. All right. He unfroze. All right. No, he froze again. All right, Matt, I'm going to say goodbye. I know you couldn't finish your thought, but we got our next guest here, and yeah, the Gremlins, man. What can I say? The internet is run off like 3 different websites that control the entirety. Anyway, I don't want to. Okay, Matt Hammond, guys, joins us every week, IPOwarriors.com, previewing what is to come in the IPO calendar, offering his trade ideas and how he will play it. Again, I'll put the link up on the screen. Here, let's do that right now. There it is. IPOwarriors.com. Check it out. Matt, thanks a lot, man. Sorry, I couldn't finish your thought, but I'll talk to you again next week. Hey, let's bring on our next guest here. Christian Fromhertz. He is one of the best follows on FinTwit at C Fromhertz is his handle. I'll bring him on here. Christian, do we have you?
We do. Hey, how's it going?
Whew, it's one of those days, man. One of those days. Oh man. Are you seeing widespread outages?
Just give me 1 second. I'm having a little bit of technical difficulty. I may have opened up a session twice, so I got some major echo here, and I can't seem to get rid of it.
Okay, fair enough. All right, well, I'm going to keep talking, I guess, even though I don't hear an echo on my end, Christian. So, and now he's gone. Yeah, it was funny. Like, for a second, nobody else was able to get in to this stream. Like, Christian couldn't get in. Mitch couldn't get in. A bunch of guys here couldn't. Rohan, they couldn't get in. It looks like people are at least able to get into the stream now. But I was about to just end the show because nobody else could. If you weren't here, you couldn't join already. So it looks like that is okay. I mean, I see Mitch is backstage, just hanging out. It looks like Christian was able to join, which means he will be able to join again. I would hope. I hope we do get technical today. Neil's going to just hop on this stream probably. I hope we do get technical. I hope we do Moon or Bust. I hope we do At the Close with Joel and I. But I don't know, frankly. We're having all sorts of problems today. So, wait, I'm seeing something from Aaron Thomas. Okay. Anyway. All right. You know what? Let's just go back to the markets. All right. It's fitting that we're having Gremlins today of all days because let's go to a Benzinga Pro here. Bada bing, bada boom. Actually, no. Let's just start with crypto. Okay. Let's just start with crypto. This is what I was saying at the top of the hour when I thought I was live and I wasn't. I was talking to myself. I was saying at the time that I'm done with crypto as a hedge. I am tired of people saying crypto that's not a reason to own crypto, in my opinion. right? Now, since I said that to myself 45 minutes ago, Bitcoin has decided to go green today. But being a hedge for stocks is not a reason I think to own crypto, because more often than not, Bitcoin, Ethereum, Cardano, they do trade down on days when the stock market is lower. Why? I have no idea. Does anyone know? I have no clue. And now this being said, Bitcoin has turned it around for the moment. We just spiked, at least in the futures, up to 49,275. Let's do a quick refresh here. Here, you know what, Mitch? You want to come on and just hang? Yeah, what the hell? What's up, man?
Got to turn the mic on there. There you go.
No one else is able to get into the stream. It's just me and you.
I don't know why. I think it was because it was my stream to begin with. Maybe it snapped in me. Like I got in real quick, but hey.
I don't know. I have no idea. Anyway, so my rant against Bitcoin as a hedge has been proven wrong for the moment because it is green for the day. But Ethereum, Cardano, Solana, Binance Coin, Litecoin, all down, with this actually more than the overall stock market. So crypto being a hedge, no. There are many reasons to own Bitcoin and crypto. A hedge is not one of them. End of soapbox. By the way, you can get $50 in Bitcoin for free. All you have to do is download the Voyager app. Fund your account with $100. Use the promo code ZING. Make your first trade. When you do that, you'll get $50 in Bitcoin for free in your account.
That's like a 50% return just to start off.
It is. Oh, man. AT&T outages, Google, Facebook.
Oh, it's horrible right now.
What is the world coming to?
How's the overall market? How are we looking? I know we're just looking.
Well, let's see. We are near the low of the day. Let's go to some charts. We are near the low of the day in everything, in all the major indexes, right? Let's go. We'll go to the SPY. We'll start there. No, I can't. Let's try this.
Chart's giving up on you? I got you, bro.
My chart just died. Let's try it again. Let's refresh. Does that work? Yes, it works. Okay.
There you go.
Okay. Man, it's one of those days. All right. Oh, wait. Christian, are you back? I think Christian's back.
Christian's back.
Let's see.
Let's bring him on.
Christian?
Back.
Hey! Yes! Oh, what a day.
Well, so what happened was I had another session running in the background, and it had like a delay of 2 or 3 seconds. So I was like, "There's no way I'm going to be able to understand which one is correct." So thanks, guys. I apologize for that.
You know what? It's you two, the only people that are able to join this stream for some reason. No one else is able to. I don't know what's going on. Christian, we got internet outages. We got stocks in the red. What is going on?
Yeah, a little bit more volatility than I was looking for, coming into today. So I don't know where you guys are at, but we could talk about the indices first. And
yeah, let's start there. We're at the low of the day. Let's start there.
What's that?
We're at the low of the day in the SPY and the Qs, almost in the Russell. Let's start with the indexes.
All right, let's do that. I can share my screen, right? Let me.
Yes, you can.
All right,
at least we can still do that.
Let's get that going. Share screen. How we doing?
Yes, I see you.
All right. So, unfortunately, you guys got to have me on when it's a little bit better price action than this, unless you're super bearish.
Wait. I thought you love volatility.
I do. It's nice. Just not days when you kind of come in a little bit when you've got positions, but it's great for day trading. Unfortunately, I'm more of a swing trader.
Got it. So, all right, what we've got here is a chart of the S&P futures.
Yeah. So
tell us what you're seeing.
We'll start with just the daily chart, and I was looking for 43.35 to hold. So now that this didn't hold for the day, we've got a mess on our hands. So what I kind of looked to next, knowing that we've broken that, is how much more damage are we going to see here in the short term? And we don't really know that, right? And but what I do look for is some type of level where I can say, okay, if we hold this, it's we could possibly that's one thing that's positive. So we haven't been able to hold 42.92 either. So these are my levels that unless this holds, I want to be more defensive. We have not taken out the lows from last week in S&P futures, but we're pretty darn close. So, I think this is an area to be defensive in. NASDAQ, of course, which is clearly seeing an unwind today. I've got a level to watch in NASDAQ futures down here at 14,354. That's coming into play pretty quickly. So for now, you got to try to sit on your hands, or if you are getting into the market here, I think it's best to to be using pretty tight stops, and then going from there and kind of watching to see how things settle in.
All that being said, Christian, it is paid to buy the last 2 or 3 or 4 dips. Every dip, but especially in the last couple of weeks when we've actually gotten some dips.
Right.
It's paid to buy them.
Right. And that's absolutely true. But sometimes the dips are a little bit bigger than the normal dip. And, coming into this week, I thought, hey, same exact thing is what you just said. Hey, we've got a dip. We've got through September seasonality, which is a horrible month. It's the worst month of seasonality. But October can be rough too, especially parts of October if you look at the seasonality, which again is just one factor. But from there, once we have something like this go on, right, we don't know if the dip is going to be, clearly it's more than 2 or 3%. Is it 5%? Is it 7%? And then you kind of have to just, understand your time frame if you are buying the dip. And if you're a shorter term trader, you really want to make sure that you're honoring your stops in this environment.
Yeah, it's a really good question in the chat. Rich Kaiser, what happens when you run out of money buying the dips and it keeps dipping? Well, that's when you have to know your risk tolerance, right?
Right.
You probably shouldn't always automatically buy every dip.
Yeah.
Right. And that's the exact, just as you started with this question, buying the dip has worked in the past, but you don't want to get yourself in a position where you're digging yourself out of a hole.
Yep.
Anytime that we've got a little bit of volatility, and if you're more of a long only type trader, then you really want to have that dry powder and make sure that every trade that you're taking in this environment, that you've got some stop price and that you're thinking things out, not just oh, geez, I got an opportunity. We haven't had a dip before. That's fine to have that mentality, but you have to have a plan in terms of, okay, well, what if we've got a bigger dip on our hands? Because, let's face it, the three of us and everybody else, nobody knows how far or how deep the dip is. We've had this nice muscle memory where, most of the dips that we've had have been quite shallow, but there's certainly situations. And I think if you just look back at what we saw last year too, we did go below the 50-day moving average, and we were kind of lucky here that we got back above, but it went back and forth, and even though October is a better month in terms of seasonality, you could see what we did from 10-13 on. So you just have to be kind of open and objective to everything, and to any possible outcome. And this energy move right now is just kind of showing you where the money is going right now. It's going into commodities, but the issue is that when you look at the S&P, the growth and tech is such a larger weight in the S&P. So if they're going to be unwinding tech and growth as they are today, and as we started to see,
that's a great point.
As well, it's going to be more impactful because energy, and I don't have the data up right this second, but energy is less than 10% in the S&P, and it's the largest weight. Tech is the largest weight in the S&P. So these things if it was 1 for 1, then it would be one thing, but it's not 1 for 1, and growth and tech are a much bigger portion of these indices. So that's where whenever we have one of these growth unwinds, it becomes particularly painful.
I'm glad you brought that up. Right. Basically the reason that the broader index, the S&P 500, the SPY, didn't go down this summer was because the six largest technology stocks weren't going down.
Right. Yeah.
And now that, and I was going to ask you this, but I don't think it really even matters though. Is it a question of like who is leading who here, or it just doesn't matter? You know what I mean? Like are the markets going down because tech is weak, or is tech weak? Is it the other way around, or does that not make a difference?
Well, I mean, sometimes it's both. Sometimes it can be, and that's why, making the point of tech being the largest weight in these indices is a little bit dangerous, because if it could just be that rotation out of tech and into some other places, it may, there's many traders that are just looking at the indices. So that's just going to cause, because of that weighting scheme, you're going to see that pressure in the indices, and that's going to cause people to monitor those levels alone, and that could cause some selling in the outright indices, and I think that's what we're seeing today as well.
Question from Dupree in the chat. Christian, what are your thoughts on banks, given that yields are going up?
Yeah, so I have the position right now that I'm long banks, but it's one of those situations too where you can't just say, okay, there's a move out of tech and I think rates are going to go higher. There's a lot of factors at play, right? I mean, right now we're getting to the point where if you look at what bonds were doing today, right, they were moving down up until, so bonds moving down, rates are going up. That happened until 950. Well, once we have these concerns about China and some geopolitical issues, bonds kind of change. They kind of change to be maybe they might start to see a little bit of a flight to capital. So the worse things get, you might actually see bonds go up. And then, that kind of kills the whole thesis for the banks, and going along the banks. So you have to be careful with that. And if things really start to get bad, you might see bonds catch a bid, right? And, for instance, SIVB, which is a name that I've been in and out of, you can see it's kind of slipping here too. It's down 2%. Because once things really start to kind of go bad, that sector rotation can work pretty decently when the VIX is around a 20 or under. But once you see the VIX start to spike up as it is today, it's 24. It's really tough to kind of play that sector rotation game.
Yeah. I mean,
so you want to be mindful of like what the VIX is and how volatility is moving, because in that situation, banks, energy, tech, once you start to really, once volatility starts to really crank up, everything kind of starts to get hit a bit.
And so then the $1 million question,
Kristen,
is like, and I almost like am hesitant to even go here, but like, let's say we do get a prolonged period of, at the very least, sideways action, or potentially more, right? And I don't think that, but it could happen. And if that were to happen, then how would you position yourself?
Just light, I would really increase my cash balance. So I do that from time to time, when I start to see things and when some of the trades that I've got into, if they turn out to be wrong, I just take stops, and really honor what the market is doing. I say this all the time. I have ideas and things that, like, just like we talked about the financials. Hey, the financials are looking good. They're showing relative strength versus the overall market. However, if that thesis fails, right, price and trend are the number one for me. I'm not going to argue with the market, right? Because if I argue with the market and act stubborn, what usually happens is I will have a bigger correction in my account, and I don't want that. So the main thing to kind of preserve here is your confidence and your P&L. So it's good to kind of keep those ideas, but make sure that you have those stop prices set, especially whenever you're entering a trade, whatever you're deciding what could be the play that you're looking at, right? You have to have a stop price to say, this is where I'm going to be wrong. Because again, if we start to see the VIX, right now it's 24. If we start to see the VIX crank up to a 27, to a 30, you're going to get yourself into trouble buying that dip, right? So number one, above all else, is to have a trading plan and honor price, right? Because what's the age-old saying is that the markets can act irrational longer than I can stay solvent. So when we're seeing that volatility, that should be in the back of your mind that this market is greater than any of my ideas, any of your ideas, or any of any other expert that you see that's on TV or anywhere else.
For those watching, we are live with Christian Fromhertz. His Twitter handle is @CFromhertz. I highly, highly, highly recommend you follow him on Twitter. He's dropping knowledge there every day. We are trying to start get technical our next show if our host will ever get here. And if not, then I'm just going to hang out. Christian will hang out for a few more minutes, and I'll hang out with Mitch. And our guest we have is actually already here for the show. So I'll run with him. But it's one of those days, everyone, we're just going to stay on. We've been on the stream since 11 a.m. We're going to stay on the stream because apparently there's some massive Amazon Web Services problems today, and a lot of websites are having outages, ourselves included. I saw AT&T, I saw Facebook, I saw Google. So, yeah, maybe long, I don't know, Fastly on a deal like today. I don't know. Or Akamai or some internet infrastructure. But I don't know. But in all seriousness, we are same story. We're at the low of the day. Just off it in the NASDAQ, barely off it in the SPY. Every sector red except for energy and utilities.
Yeah. It's one of those days. I gotta agree with Christian about the swing trading environment. It's been a little tough here. I got stopped out a couple of swing trades myself, but that's what it's all about. I mean, at the end of the day, you got to set the plan, and if the plan goes against you, this is not the time to try to fight and get into those bag holding situations. At least that's what I would agree with. Also, there's times in the environment where you're seeing stocks just rip. And last year, there was a time where, you bought any dip and pretty much came back. And then there's also, you got to know that the market environment has changed since then. And, one thing that I was always taught was that you can't always compare the way that things were to the way that things are right now. And I think right now you definitely need to have a little bit of case of being risk adverse, being pushing on the risk side.
Christian, I just had a thought. Oh, yeah, something else I wanted to bring up is people are going to be wondering or asking, why are we down? Why are we down? Why are we down? I don't know why we're down. I don't know if you know why we're down. I think that's the point, right? Is there doesn't have to be a reason.
Yeah, I mean, and there doesn't have to be a reason. And, I see a couple things, that a couple headlines, right? There's some more issues with China. There's another company that I've never heard of before. I think it was Fantasia or something like that. It's the second default. So there's some contagion.
Wait. I heard that. I thought that was a joke this morning. That wasn't a joke?
That I don't believe was a joke, but nevertheless, I mean, and then I think you have some geopolitical and political things that are going on. So it's kind of an excuse. And the main thing is, if you're watching price, it really depends on what the institutions are going to do. The institutions always drive the markets. So if they're going to lighten up, regardless of what the reason is, you have to honor it. And so I have Tesla up. So here Tesla's a good example.
I was thinking about it.
They crushed their deliveries. And I've tried to trade actually twice today, and I just got stopped out the second time because 786 is the level for me to try a trade. So when this happens, and this is important, because it's an important part of trading, right? Because as I was just saying, number one, I'm obviously a single stock trader and so forth, but you have to be a risk manager. And I hear Dennis say this a lot in the room too, in the pre-market session. You have to be a risk manager, right? At the end of the day, that's what's most important. So what I usually do is my breakout point for Tesla, and I put out a video on this last night, is 786. And then we can kind of concentrate on some things like 811. But until this, so as soon as I get stopped out on a trade, I don't get bummed out. I just place an alert about what, where I care in the name again, and that's above 786. And I'm happy to try a trade again. And sometimes paper cut losses, they happen, right? But paper cut losses will keep me in the game essentially, right? If I stay into trades and they continue to break down, that could really cause me some trouble down the line.
Yeah, I think either way, this is a very interesting time because either A, we get deja vu all over again, a repeat of the last 2 weeks, or B, we get our first real period of volatility, sustained volatility since March of last year.
Right.
We've been straight up for a year and a half. So
yeah, so we were doing, if you look back like a few weeks ago or a month ago, sometimes these things become a self-fulfilling prophecy. Everybody starts to say, oh, well, we're due for a 5% correction. When I start to see everybody quoting over and over, hey, the last time that we had a 5% correction, it's been this long. Sometimes it's almost like people are wishing for it a little bit too much. And then the other thing that happens is when you do get the 5% correction, it's never like, oh, great, let me deploy some capital and things will be fine. Because then you're worried about, is the 5% correction going to be a 10% correction?
See, that's all. Okay, that right there, what Christian just said was one of the first hard lessons that I ever learned. I basically spent the entirety of 2000 and was it 15 or 6? I can't remember, 15 or 16, being like, okay, I have some things I want to buy, but I want to wait. I want to wait because the market is just too high right now. And I'm going to wait for a pullback. First off, the pullback might never come. Okay. Second, if it does come, who is to say that you are going to swing at the pitch? Because it is hard. It is hard to pull the trigger when the market is going down. It sounds easy when the market's going up. Oh, I'll just wait till a pullback. Duh. I'll just buy the dip. It's never that easy.
No dip is easy. No,
it is never easy. And so I think this was in 2015. And then so like a year later, I was like, oh shoot, like I just basically missed an entire years of gains because I was like, oh, I'm gonna wait till the market goes down. It didn't go down. That was 6 years ago. Like, what was I waiting for? So that was a good lesson to learn. Obviously, that was more for longer term positions for me, but it still applies to trading as well, right? It's hard to swing at the pitch when the market's going down.
Right. So we mentioned like a couple negative things, right? So talking about, because I know this is not fun when you talk about taking, I just took a stop on Tesla. Being a risk manager and so forth, right? That's not like the most exciting thing about today, but it is part of the process, and it has kept me. I've been through a couple of these times this year where you just have to kind of live to fight another day. Now that's the negative part. The positive part is you really want to pay attention to what names are acting better, right? I like to focus on relative strength. What names are starting to kind of like show that they're holding up better than others? Because every time we do see one of these dips, right, you're going to come across names that are going to hold up better than others. Oftentimes, those are the leaders going forward. So that's what's one of the most important things, and it's tough because on a day like this where you've got a lot of areas going down. We got small caps down. I was looking for the small caps to shine a little bit today. They're not doing it yet, but it's a process. You got to kind of wait. Be patient. But really, what I like to find on days like this is what areas are actually holding up when everything else is going down. So that's kind of I've seen a couple names that are looking okay. But it's really going to be kind of towards the end of the day where you kind of go through some of your scanners, which I use a lot of scanners. I use FinViz a lot, and I kind of go through some of my watch list and say, hey, which names actually didn't really go down much or actually were positive on the day? That's where you're going to find your good trades going forward.
That's a great point. And my first instinct was as well to look at the small caps because those are the ones that got punished for the last 6 months while the market, while the broader S&P did nothing but go higher. So maybe now that we have some tech weakness, it would stand that trend reverses. But you're saying that's not the case. I mean, the IWM is outperforming today, but still in the red. So
yeah, still not as good as it should be.
Yeah.
So I'm looking for this as the market's moving. We got pretty close to taking. This is a downside level that I'm watching in Nasdaq futures. We got pretty close to taking it out. I would love to see this level be taken out, 14,354, and we're starting to rebound a little bit. But yeah, so let's see if we can kind of build off this green candle and kind of take back was this 20 period moving average on the 5-minute chart. If not, if we can't kind of regroup and build off of this, then yeah, I'm watching for this level to be taken out. It's so close. Sometimes they get so close and they don't get taken out. So we'll just kind of have to see if we build from here.
Okay, Christian, I'll let you go in a second, but just what if it ever gets to the point, and I'm not saying it will, but if it ever gets to the point in a lot of these stocks, would you lean on the COVID lows, or is that a level you got to kind of throw out because it was so crazy?
Which level?
The COVID lows for everything. I mean, I know we're very far away from that.
Yeah.
I'm just saying, is that like a level? Like, do you look at that at all, or do you just throw that out the window because it was?
No, I mean, it's too far.
Okay.
Away.
Okay.
So if we start to kind of, depending on how we go today, I will be probably like out of a lot of positions if we don't really get better today. Then I'm just not going to mess with a downtrend and trying to pick where we go down to. But
yeah,
I mean, that's not an area that I want to see us go down to. I do think that we could possibly go down to 42.28, possibly down here to the 200-day moving average. But I don't really want to be holding a lot of positions in my trading account as we start to revisit these areas down here.
Yeah.
So, for the day, I'm looking for, I know I'm throwing out a lot of levels here, and I sometimes I do that while I'm in the middle of a process here.
Yeah.
But I want to see us stay above 42.92 for the day. If we don't, and if we take out the low from last week, I will be much more defensive because I just don't want to mess with how far down are we going to go. I will be respecting price and being super disciplined. But the day's not over, so we can still get.
I'm sorry, that was in the S&P futures.
That's S&P futures. I'm looking for 42.92. So the level right here for us to get back above. If we take out the lows from last week,
which we have already,
not in futures.
For
SPY we may have, but not in S&P futures.
Oh, really? I see from the 20th. I see. Yeah, what you just said, 42.93, which were. Oh, you mean on a closing basis?
On a close, yeah. So
okay,
on a closing basis.
Okay.
So for today's close, I want to see us get above 42.92.
Got it.
Okay, because the most important thing is the close.
Right.
Right. So we can breach areas, intraday, but I want to see us reclaim 42.92. That would get me a little bit more comfortable. If we can't do that, right, and we're kind of caught. Let's say we close where we are here. This is not a great position to be in because we're kind of caught in the middle of last week's lows, which is right around 42.67. And we're below this level, which is, again, it's kind of no man's land. If we close below last week's lows, right, then that means get defensive, increase my cash position, and take off some things, even though I've got individual names on, and I may decide to kind of trim some of those things, even though the stop hasn't been reached there, just to take a more defensive position. So again, I'm not really trading the individual. I'm not really trading the indices that much, but I'm really paying attention to them for important levels.
Yeah, Christian Farmer has given us the one level that matters above all else. Last week's low in the S&P 500 futures. Christian Fromhertz can be found on Twitter at @CFromhertz. He is the founder of Tribeca Trade Group. Christian, thanks a lot for coming on today, despite all the technical gaffes.
Absolutely, guys. A pleasure.
Right. Thanks a lot, man. All right, I do have our Get Technical is like supposed to be on right now. Neil Hamilton, you guys know him. He's trying to get into the stream and failing miserably, but I have his guest here in the background nonetheless. I may just bring Chris Capri on in a couple of moments and just hang out with y'all, because the way I see it is, Christian just said it, and I mean, it's a really, really probably the most important day we've had for the market that in quite some time this year, maybe arguably this year.
I would say this year.
This year, I think that's a fair assessment.
Mhm.
Maybe I'm being a smidge over dramatic, but maybe I'm not.
I mean, it's an important day for sure. I mean, we had a lot of good news on Friday, right? Or at least relatively good news for the market.
The problem is there's always good news and bad news, and so I always just throw it all out the window. But
right,
Christian's right. I mean, last week's low, critical. I can tell you if we do have at the close today with Joel, that's the level he's watching right now. That's the level of levels right now. It's the level that everyone's watching. Is please hold last Monday's close. Please hold last Monday's close or low. Yeah. But let's see what Chris Capri thinks of this. Second Skies, Forex.com. Chris, good afternoon, sir.
How's everybody doing today?
We are fighting through a red tape and massive internet outages, but site-wide outages. But you're here. I'm here. How's your day going?
Not bad. We just closed some unfi shorts that we had taken from last week. We did we sold this kind of bounce and unfi here. We sold right around 50. We did a 50-45 bear put spread, or we got long a bear put spread basically. We felt like this was going to roll over.
On UNFI?
Yeah, UNFI. We did that last week, so we just closed that for profit. We took Tesla. We made a little bit of money, not as much as we could on that. I kind of wanted to comment about, what Mr. Fromhertz, I think it's Christian Fromhertz. I've never met him before, but first time heard about him. So I like what he's saying. Him and I pretty much are cut from the same cloth in the sense that, what really matters is flows matter more than anything. It doesn't matter what the fundamental reason is.
Yeah.
It doesn't matter what the technical reason is. It doesn't matter what the sentiment reason is. It doesn't matter all those reasons of, information that people decide and make decisions on. They have to get converted into an order. And that's what becomes order flow. And so it all goes through the same tunnel of order flow. If you're a fundamental trader, you still have to place an order. If you're a technical trader, you still have to place an order. If you're a sentiment trader, you still have to place an order. So all those things get distilled and go through the same quarter of flow. And whatever is the dominant flow is what's going to direct the market, regardless of sentiment, fundamentals, doesn't matter. Evergrande doesn't really matter. It all comes down to flows. Yeah. And, one thing he was saying was that like Tesla, has been a little bit tricky to trade. And we're kind of seeing the same pattern today in Tesla, in Qs, in SPYs that we saw last week. So one of the most important things, and let me show you kind of what Christian was talking about, is that
you want to share a screen for us so we can see.
Yes, I do. All right, so here
I have my chart, but all it's got is some moving averages on it and nothing. There we go. That's better. All right,
there we go.
So this is Tesla.
Yeah, so you're seeing this structure play itself out that, we talked about last week in SPYs. We said, look, as soon as SPYs gets below 440 or SPX gets below 4,400, that is where, and this was this week, this was on the 28th last week. We said, as soon as we are below 4,800 or 4,400 in SPX, we are bearish. And the reason why we were bearish is because that's where the options market went into negative gamma territory. Negative gamma territory is when the market is short options. So the net gamma out there is short options. When the market is long options, we're in positive gamma territory. Negative gamma territory matters because it shows you that no longer are we kind of in this call controlled environment, but we're also in an environment where if the market's short options, net short options, that increases volatility. It increases volatility in the markets. And that means swings up and down. And that's why if you look at SPYs, if you look at SPYs on, say, a 1 hour, we weren't in negative gamma territory when, and let me get my trusty pen out. We really didn't hit negative gamma territory until, you see, this is all positive gamma territory. Super chill volatility. That's positive gamma territory. Same thing, positive gamma territory. Where do you see the volatility increasing? right as soon as we start to get below 44.50. And then look at last week. These are wide swings up and down. That's negative gamma. That's what happens when the market is net short options, particularly in SPX, SPY, Qs, IWMs, which are highly dominated by the options market. That creates bigger volatility up and down. And that's why these swings you're seeing up and down are way more volatile than these swings you would see here. So once we got below this 4,400, bearish. It was all bearish. We said, look, we're now in negative gamma territory. Until we recover this on a daily basis, we are bearish on this. And you're seeing, again, still wide swings in SPX, SPY. So this week, we told our members, hey, look, until we're above 4,400 on a daily closing basis, we are bearish. The problem is that when you start getting these kind of higher volatility environments, you're going to see that the overall direction is bearish, but look how it's choppy.
Yeah. Oh, so much chop.
And this is one of these little environments are some of the hardest environments to trade, because if you're bearish and the pullback point is not consistent each time, you don't really know where to place your entry per se. And if the market breaks, if the market breaks these lows as it does here, there are going to be some breakout traders who are going to trade that, and then they get caught trapped out. There isn't as much room on breakouts as there are pullbacks. So you have to trade pullbacks, but the pullbacks are different levels each time. You see how it's a different level of each time? That is really them. It's like your archery target is constantly moving. It's not that there's wind, it's that the target itself is moving. That's tough for traders, institutional, pros, retail, it doesn't matter. It's tough for everybody. And so you're seeing this pattern that the markets get bearish the first roughly hour, and it's relatively consistent. But then as soon as you start to hit 1 hour into the session, you see this. And if I show you the 5-minute charts last week on SPYs, you'll see a lot of this. So here you kind of see a lot of that. We get below SPYs, and then it just gets choppy, and then bounces back up. Yep. This is a lot of chop here. And that's hard to trade. And so my rule of thumb is...
I'm sorry, can you go back to what was the timing on that? That was the close?
This is a ramp into the close there. It's not really a ramp into the close. This is like New York lunch, and then we start to bottom, but then we sell off in the close.
Yeah. Okay.
And so my general rule of thumb in these environments is, first off, if you trade breakouts, like if you trade these types of breakouts, market breaks here, you're like, okay, I'm short. And then you start to see this kind of choppy structure, play itself out, then don't trade breakouts, trade pullbacks. Look for deeper pullbacks than usual. And the other thing is very straightforward, which is that if the market is below the session VWAP on the day, keep trading bearish or primarily bearish until you start to see stabilization in prices above the VWAP. We've been below it, so you should be on the short side. There are some long trade scalps here, off the 426, 427. But again, look at let's say you bought the 426.77s here. Here you made great money. Here, this was much tougher. So again, the levels are constantly changing. It makes it harder. You get stopped out here, you get re-long, and you're like, oh, okay, this goes higher. But then it pulls back. These types of environments, we call them unclean, volatile trends. The levels aren't clean. There's volatility, and yet it's still a trend, but there's a lot of chop inside that. Those are the hardest structures to trade. So look for deeper pullbacks. Try not to take breakouts on this one.
I think this also goes to knowing your strategy and when it can work and when it cannot work, right? Because no strategy works all the time. That would be ridiculous.
No, there's no strategy that works all the time. That's an illusion, because the market and the reason being is really simple. The market is a combination of order and chaos. It's not all order. It couldn't be all order, or there'd be no alpha in the market, so it'd all be predictable. It's not all chaos, because if it was, there would never be any stability over time. You'd never have long-term track records. It's a mix of both. So that's the first reason. And the second reason is that there's an infinite amount of permutations that you can see in the price action. Even though, the order flow structures are relatively the same, they can still express themselves in various ways because there's so many variables when you put it all together that influence price action. And so, negative gamma environments, you could have the same imbalance of order flow, 500 million to the upside and 100 million to the downside. And that type of bullishness will be different in a positive gamma environment versus a negative gamma environment. It will also be different based upon, where hedge funds are, and hedge funds are never positioned at the same levels over time. So because there's all these different variations, there is no strategy that works all the time. That's why I suggest, look, and I tell my students all this: strategies come and go, skills never die. It's a super important rule. There are so many strategies that hedge funds have produced that on average they last 6 to 18 months, and then they have to recycle them, keep the elements that work, find new elements because of the parts that aren't working, and then reconfigure. There's no strategy with fixed variables that works the same or consistently over time. And there's a lot of environments that strategies don't work in. So if you build strategies only without the skills, you won't have the skills to know when your strategy is not working and when it is working. But if you have the skills in place, then you can know, hey, these strategies work best in this environment. These strategies work best in this environment. These strategies work best in this environment.
Yep.
And just get really good at knowing when to transition to those different strategies. When is it time to pull out this arrow? When is it time to pull out this arrow or this type of arrow?
That's it, man. That's it. And that's what separates the professionals. And you can be a professional and still be retail, right? Chris is the professionals from everybody else. For the professionals versus the hobbyists, right?
Yes.
That's the difference.
And that doesn't mean that there's anything wrong with being a hobby, because there's a difference between me. I've been doing this for 21 years. I worked on Wall Street. I was a broker. I've traded for a hedge fund. I have institutional experience. I've worked with, even in my early years, I was working with like 30-year bond traders who like knew the bond market inside and out. There's a difference between me and say another retail trader that they're not spending 8, 9, 10 hours a day in this. And they're not, they don't have the money to have all the tools per se.
Yep.
And they don't have the time to, spend their weekends like poring over charts and really looking at things. That's okay. The key is that you understand this is the time and space and energy I can put into this market. I can put in 2 hours. I can put in 4 hours. I can put in 6 hours. I can do this as a pro. I can do this as, a part-timer. I can do this as a hobby. The key is not to be a hobby trader and then pretend to trade like a pro or think you can be a pro. You can't. You can't be in the NBA just practicing like 5 hours a week. Kobe Bryant, could do 5 hours in a day. Pros can do 5 hours in a day. You have to understand, where am I able to perform at? What level is that at? And then you maximize that opportunity. To think you can be a pro while only putting hobby amounts of time and hobby amounts of training, not going to happen. You're going to create this kind of dislocation between the reality of what you want to be and the reality of the maximum you can be. And when those don't match up, you're going to have problems. You're going to be disappointed. Like, why am I not making $100,000 a month like this other pro trader? It doesn't match up to reality. And so don't compare yourself to anybody, just focus on, where's my skill set? How could I grow? How can I grow today to get better today within the framework that I can, as a hobby, as a part-time, as a serious trader, as a pro trader, as a professional, trader. That's what you have to figure out. That's what each trader has to figure out.
That's a really good point, because unlike, the NBA, for example, like, you cannot just rock up and just find yourself in a game with LeBron James, but you can find yourself. It's very easy to find yourself trading against the LeBron James of trading, right? That's just the way it's open to everyone. It's a market, right? Anyone can anybody can play.
Anyway, it's a market. It's a market where, you are kind of like going to the pickup games on the basketball court, except everybody, or the majority of people there are like in the NBA. And, you can't go up there and be like, yeah, I'm going to ball with LBJ right now. Like, it's just not going to happen. But you can go on there and ball to the best of your abilities. And that's what can make you money, And so if you try and ball with LBJ, you're going to lose money on those pickup games. If you try and ball with the players that are at your level, you can. You are jumping into the NBA. So don't think, there's very few environments where you can just jump into the most professional level there is, whether you're a pro or not. There's like sports, they don't do that. They don't take the high schooler and say, yeah, you can jump in the NHL even though you're a freshman.
Right.
Not going to happen. So,
wait, Chris, do you do longer term investing or no?
Yes. Yes, I do. I do it all. So I day trade.
Okay.
I trade.
So all of this being said, if the last hour and a half of it, all this being said, if you put on your investor hat for a moment, are you?
It's on.
It's on. Are you getting a little bit trigger happy here?
No, not yet. Not yet.
For the things on your shopping list, whatever they are.
Yeah, totally.
Yeah.
Not yet. And part of it is I'm going to want to see some stabilization in SPYs. Kind of like how I think his name's Christian Fromhertz, sort of is of Tribeca Trade Group.
Christian,
he was saying as a long-term trader, you don't care about the short-term fluctuations. They don't mean that much to you at all. You don't care about the intraday ranges. You're going to care about where is it going to close on a daily and weekly basis. Is it breaking last week's low? That's going to trigger some bearishness to it. Is it closing, daily below a certain level or above a certain level? That will add some technical bullishness to it. I am not there yet to really add on. I have a long-term trading service for my members called Sky Stocks. And the last 3 weeks, we've only posted, or the last 3.5 weeks, we've only posted 2 long-term trades because I keep looking at the environment and I'm like, not yet. Now's not the time. I want to, because from a valuation perspective, some stocks are down 10, 20%.
Yeah.
But until this momentum changes, I don't feel from a long-term basis it's there. There was some hope last week in the sense of like, hey, we hit this low, we bounced, we closed here. And if the market had rallied right off the bat, then I think there would have been a greater chance we start to stabilize. It's not what happened. We saw the market open, barely tick up, and now it's pressing on the lows. And that tells me that now is not the time we should be waiting for transitions in the market before we start saying, hey, now's the time to add long-term positions.
That's fair. That's fair. And to your point, there was a lot of pain this year in a lot of stocks, right? I go back to the ARKW, which I've owned for a couple of years now.
For sure.
And people say it in jest, but there's some truth to it. Hey, if you loved it up here in January, you should love it now. And what Chris has said is it comes down to knowing your tolerance for pain, and also knowing when. Do you always want to be buying? Or is it better to just it's probably better to not try and get the bottom because you're not going to get it unless you get super lucky. So
okay, so there's some great things here I want to tease out real quick, which is that you'll see this common theme amongst what I would probably say is the retail trading class. It's just that if you liked it up here, let's pull up your ARKW.
Sure.
Let's do that.
Yeah, let's do it.
And let's say, wow, if you liked it up here, you must be loving it down here. Well, part of the reason why I may have liked it up there was because of the conditions at that time. You can't think that the conditions from February are the same conditions that are here now. Like that's basically saying I have a fixed view of ARKW, regardless of what time of the year is, regardless of the market conditions, regardless of if their holdings have changed, if the market has changed, if the flows have changed. I should have the same view. So if I liked it at 180, I should like it at 130. And that is not how markets work. Markets don't work like that. It's like weather. It's a constantly changing pattern, and the conditions change over time. So when I hear somebody saying that, I always I don't want to say cringe, but I'm always like, okay, I don't want to listen to that advice because the conditions now are different.
Yeah.
And so, first off, in terms of you're saying, hey, this is kind of the second point in what you mentioned. Hey, there's certain trades I'm in that are kind of these max pain trades. There's a lot of pain in these things.
Oh, yeah.
And that is going to happen when you aren't totally clear on your risk parameters. Like if you're not clear on how much risk you want to take on something, then there's a good chance that, you get long some of these things here, you get long, and now it's like outside of your risk parameters. And you're like, wow, I shouldn't be, this is way more risk than I expected it to be. This is not playing out the way I expected it to be. I've had many of those trades this year that I had, probably about, I would say 10 trades this year, and I've done 700 trades this year. I would say 10 that I completely violated my risk parameters. Yeah. And it wasn't even violated by like a little. It wasn't like I was like, oh, I'm risking 1%, and I'm out 2%. It was like, no, I'm risking 1%, I'm out 5% right now, or something like that. And from my experience, this relates to an important adage in the markets, which is that if you are a long-only investor, that it's not so much about capturing the best upside moves. It's about avoiding, you actually make more money if you're a long only investor by avoiding the biggest drawdowns, because drawdowns happen faster than buy ups as a whole. And so if the market sells off faster, then it ramps up, stairs up, escalator down, as they say. Well, then if you can avoid those big sell-offs, you actually have better alpha than someone who gets the biggest rips to the upside, but also takes the biggest hits to the downside. And so, that works for trading as well, is that it's not so much about like catching the biggest home run winners, like I'm buying this at 110 and I'm closing out at 180. It's making sure that you don't buy at like 185 and are stuck in it at 130.
Yeah,
because that's a huge loss. And I look at my trading last year, I made sure I never really took a huge loss. I had one trade out of 500 plus trades last year that I took a big loss. Every other trade I was like, nah, I'm out. I don't care about this anymore. I'm out. I don't want to take the big loss. And the equity curve was just super consistent. This year I did it for the first, few months of the year, but then I started taking bigger risk positions and really not controlling risk the same way. And then all of a sudden the P&L curve is like way all over the place. And eventually you have to step back and be like, that's, I can't do that anymore. I need to have very defined risk parameters for each one. Maybe the trade still looks good, but it's hit my risk. I'm out. Let's move on. And so it's super important that we avoid those as traders, because if you can do that, then you will increase your chances of making money over time.
Yeah. A couple questions from our chat here.
Yes.
Specifics. I think, let me scroll up here. I think somebody asked a while ago about, was it Novavax? Is that what they asked?
Yeah. Yeah.
Okay. Can you tell us about that?
Sure. Who wants me? Let's see. Who wants me to analyze Novavax? Like, what time frames are you looking at on Novavax? So I have a rough idea, because it could be a day trader, it could be a swing trade, it could be a long-term trade. There we go. Jay Rice. Chris, what did you do with your bullish Novavax call? I only have a bull call spread in Novavax. I don't have any bull calls in Novavax. I haven't done any single leg calls on Novavax for a while.
Okay.
So I have a bull call spread right now that I'm holding, and it doesn't expire until December, January this year. There's really not much for me to do at this point. If you'd like me to analyze Novavax right now, let's do that. So looking at Novavax right now, let me pull up what I'm seeing in option positioning in the markets and just kind of open interest flows and things like that. Okay, so with Novavax, so right now we have a wide range of like open interest puts and calls, like from 140 up to 300. That's a super wide range, partially because Novavax is a volatile stock. But people are basically saying we're not sure where Novavax is going to land because it's so off the board, like up and down.
Yeah.
That's why you're seeing such a wide range right now. When I look at the overall kind of environment right now, I'm leaning towards being bearish until we get to this kind of 142 to 160 range. And the reason why I'm saying that, and let's map that here, 142 to kind of 160 range. So this is what we're seeing right now. And if we look at this from a structural perspective, other than this week, this is, kind of you're seeing supports here. The dip last week bounced $30 off that. You have resistance here. You have a decent chunk here. It's messy. Novavax is messy with its levels. It's not the cleanest of its levels. So I really don't want to start accumulating Novavax until about 160, maybe 165. And so I may get long some shares and then sell some premium for the next few months because it's a volatile stock. Or I may get long a bull call spread, maybe around 160, 170 and try and get up to 200, 215. But as long as Novavax is below 200 on a daily closing basis, I'm bearish. As soon as we get above 200 on a daily and closing basis, I'm bullish. And that's kind of like my short to medium term theme. On a long-term theme, I'm bullish on Novavax as long as we're above like 120. And that is based on a premise that COVID is probably not going to go away in the next 3 to 6 months. And there might be other variants out there that cause problems. And really, while the first world is vaccinated pretty well, the second and third world countries aren't vaccinated that well.
Yeah.
And there's going to be a massive demand for them to get vaccinated. And if they don't get vaccinated and they travel to first world countries, you're going to see more people, get infections because we're not globally vaccinated. So Norway came out and said, hey, we're lifting restrictions, not because we think COVID's not going away or it's going away. No, because we think we have to live with COVID. It might be something that's like a regular thing, like the flu season. And so if Norway did that and Sweden did that, and they're looking at the long-term trends, like COVID might be here for a while, I feel like there's room for Novavax to profit. And, they're increasing distribution to UK, EU, Canada. They just signed a deal with Japan. I think they're going to start signing deals with more countries. And so, they got more competition with Merck, the pill form, which is why you probably saw a good portion of the sell-off. But I think long-term players are going to start getting long in this kind of 140 to 165 range.
Okay, I asked the chat. I'm sorry. Finish up.
Yeah.
No, I asked the chat for tickers. They dropped a couple in, so let's just bang these out, and then I'll let you run here, Chris.
Totally.
What about Roku for Todd?
Okay, let's do it.
Todd wants Roku.
All right, Roku.
Probably going to snipe Yes,
and just to keep it kind of consistent, let's just keep looking at the longer time frame charts, because somebody can be like, hey, I want day trading here and I want swing trading here. So let's just keep it consistent. Okay, Roku. So Roku's roughly 400,000 options out there in the universe. And what are we looking at today in terms of option activity? 69,000. So we are what I would call, for me, when I see an option, the day's options volume is 10% or greater of the total options in the universe, then I consider that solid participation. Like, you're at 10%. Okay, that means there's a fair amount of institutional eyes and traders looking at this particular stock. 15% is strong. Once you get into 20%, that's very strong in terms of options volume. So when I look at Roku, I'm seeing about maybe 15% of the options expiring this October. I don't see a whole lot massive volumes. I would probably say we're at maybe on the day 5,000, maybe 8,000 for the October 15th expiry. So I'm not seeing a whole lot of October expiries. Short dated, there seems to be a lot of options today that were short dated, meaning this Friday's OPEX. I would probably say 2, 4, 6, 8, 10, 12. Yeah, you're probably looking at 30, 35, 40,000 of the 69,000 options today are short dated, meaning they're going to expire this Friday. And we're definitely more call heavy than put heavy. 42,000 calls, 26,000 puts. So if 2/3 of those options are short dated and 2/3 of those options are call based, and they're going to expire this week, then that means that fuel is going to come out of the market pretty soon. So when I look at Roku, I feel like I am bearish on a daily closing basis below 320. So until we have a daily close above 320, I'm bearish. On a long-term basis, is there some potentiality for a play here? I feel like I wouldn't want to start adding longs until about 280, which is right around this area. I think that this kind of 273 to 280 would be the first area I'd start to look at long-term plays on this. But for right now, short-term or medium-term, below 320, I'm bearish. What's the next ticker you got? So I can
yeah, a couple more here. Let's do. I'm trying to find ones that aren't overplayed here. All right, Roblox, fine.
Okay. Roblox has kind of been a underperformer this year. I think there was a lot of expectation that it was going to be solid. But it, minus this little spurt, it's kind of just been stuck between 70s and high 80s. So Roblox has about 20% of the options rolling off this monthly OPEX, which is the 15th. That's a decent chunk of change. There is about 240,000 options in the universe on Roblox. And today alone on Roblox, let's see here. Today alone, we have 28,000 options, and we have 240,000 options. So it's above the 10% threshold. So there's decent interest and activity in this today. And it's very call heavy, 21,000 calls, 7,000 puts. So it's 3 to 1, basically. When I look at Roblox, a lot of volume at 80. That's very interesting. I feel like Roblox, I wouldn't want to start buying this until the earliest I'd want to start accumulating is in the low 70s. Probably like here. This would be the first area I'd start accumulating. And as we start getting lower and lower, the lower we get, the the slower the rate of change of gamma in the markets. And that matters because the implication in the option market is if gamma changes wildly from strike to strike, that creates more hedging by the dealers. If gamma is relatively flat, like if your gamma curve between a bunch of strikes is flat, that doesn't require a whole lot of hedging. But if the gamma along the same set of strikes is like this, that requires more hedging from dealers. And I'm not really seeing that. I'm seeing a relatively kind of flat gamma curve as we start getting into these lower strikes. And so that tells me dealers have less reason to get short. And so I think this probably on a short-term basis finds a bid if we get there. If we get above 80 on a daily closing basis, it shifts the tide to bullish. So short-term bearish, long-term, I would start to accumulate some in those levels. What else you got?
Oh, man.
I can do rapid fire.
Yeah. All right. Wow. There's a few of these that I haven't thought about in a while. BarkBox, BARK.
What?
I haven't thought about that since I forgot about that. That IPO'd recently. That IPO'd like less than a year ago.
Oh God.
I forgot all about this one.
I totally forgot as well. Okay. If I had to guess, I haven't read the comment yet, but if I had to guess, they are saying, hey, is now a good time to buy BarkBox? Is that what they're saying?
I think they just dropped a ticker in the chat. I don't think they went that far. hey, X Cardiac. What are you thinking here? You want to buy it? You want to sell it? You probably don't want to sell it. It's at $6. I assume you want to buy it.
Okay, well, I'll tell you what I'm seeing. This has so few options.
Okay.
That the option data is almost not even relevant. So today we've had 1,200 options. There's so few options. It only has monthly expires. It doesn't have weekly.
Okay.
And the total options for the October 15th, there's maybe been 340 options on it. So from an options perspective, I have little to no data to go upon at this point.
Fair.
I can tell you this, that until you see a disruption in this structure, you should be selling this on pullbacks, not selling breakouts, but selling on pullbacks. Because again, you break out here and then you come back. You break out here and then you come back. So, this was sideways. Now it's tilted. That means there's an acceleration to the downside. Not massive, but there's an acceleration. So bearish right now, short term until you see some transition. We're not there yet.
Okay, Costco.
That's
a little thicker.
I'm gonna head over there today, actually. Costco, in my opinion, is a great long-term holding, just because they're such a well-run company, and their sales are continually good. They just have a lot going for them across the board. Costco, I don't see below 440. That was kind of key because, again, gamma was kind of like flat, and then once you get below 440, the gamma starts to accelerate. There's a lot more hedging requirements on dealers. So I can see Costco accelerating a little bit to the downside. I feel like now Costco becomes a really good buy, probably around 400, maybe 415 from a long-term basis. Short-term basis, I think you have to be bearish on this. You've had 2 weeks, erase 1, 2, 3, 4, 5, 6, 7 weeks of buying roughly. So the pressure is definitely on right now. And so short-term, I'd definitely be the downside. I would like to accumulate between 415 and 400.
Couple more here. Let's do. I just saw. Oh yeah, Palo Alto, PNW.
PNW. Let's take a look. PNW. You have about 150,000 options in the universe, so it's generally when a stock is below 100,000. I generally feel like my data is only so good. It's like very limited. But we have 140, 150,000 options out there, so it's not bad. We don't have to worry about any major expiries, like maybe 10% of the options are rolling off on the 15th, not much beyond that. I feel like Palo Alto is getting close to becoming a buy soon. I feel like it's getting close to becoming buy. You notice how Palo Alto is doing better than a lot of the other ones that have been selling off. Like SPY's been down 4 or 5 weeks. Costco has been down 2 big weeks. Yeah. This was up every week leading into this and now pulling back, which suggests that there's more underlying inherent strength. It looks like it probably got a really big boost from these earnings. Yeah, it did. So I look like this starts to become a buy pretty soon. Probably probably around, I'd say earliest around like 440, 445. And if we get to 410, 405, I think this becomes a stellar buy at that point. Yeah, it's a long-term play, but I think it becomes a stellar buy. So early, maybe establish some positioning here around 440 and then throw on the bigger size in the low 400s. I like this. This is the most bullish thing we've seen since.
Hey, we're getting somewhere now, everyone. All right. What about Lucid? I don't know how thick that the options market is. Maybe it is.
Yeah. There was actually we had some interesting plays on Lucid last week. They were talking about with our members. I think we pretty much said it's not getting past this. It's probably going to fade. Lucid's a very heavy options volume stock. Got about 575,000 calls and you get about 250,000 puts. So you're talking about 825,000 options out there. It's clearly generated a lot of interest. Let's look at Lucid. 21% of the options are rolling off next Friday, the 15th of October. Today we've had 100,000 options, and this is a 825,000 option stock. That's strong. That's probably in the 15% range. So a fair amount of options. Now, would I want to be long Lucid at this point? No. We said last week we think Lucid's going to hold resistance and fade off. Now that Lucid is, ironically, now that we're getting close to the middle of this range, which is a $10 range, so what would that be, 22? Might be a iron butterfly play. Maybe an iron butterfly. So sell the interior strikes around here, buy the interior strikes at resistance here and support, and hope that, it stays inside there. If it stays inside there, neutral play. I don't see enough fuel rolling off this Friday to really destroy us. Some decent, actually. 5, 15, 22, 26. About 30,000 options on the call side, and you have about 11,000 on the put side. So 40-something thousand options today. 40% of the options today are short-dated. That should take away some of the upside fuel. Lucid's not going to break out. I'm calling it right now. Lucid, unless it gets some new catalyst, Lucid's not going to break out of these highs here. So there's a good chance that the later this week goes on, those calls get monetized, takes the fuel out of the market, pulls back. I don't see Lucid as really breaking 17. So yeah, I think there's actually an iron butterfly player. I think there's a neutral directional play if we get about $1.50 lower. It's a good stock.
One or two more, and then guys, we got to let Chris go. Come on, it's been on for like 40 minutes. Insane.
I can stay for another 7 minutes. I'm all good in the hood.
Right, okay. What about? Oh, jeez.
Facebook hacked.
Okay, actually, you know what? Pull up the Facebook chart, guy. I want to hear everyone's conspiracy theories in the chat right now. Why is Facebook.com down? Is this in response to all the negative press they've gotten? There was a 60 Minutes interview last night. There was a series in the Wall Street Journal the other week, the New York Times, all these leaks, and Facebook is prioritizing profits over everything and having negative impacts on elections and mental health and there's nothing good about Facebook apparently. And is that why Facebook has been down for 2 hours? Is there another reason? I want your best conspiracy theory in the chat. Go. While you're doing that, Chris is going to look at the chart.
Okay, so once we got below this kind of 350, everything really shifts to bearish on Facebook. 4 weeks down in a row, gapping down each week. Not good. That's not good at all. And this week, what did? We opened 20 cents up, and now we're pressing on the lows. That's high momentum. You don't stay on the weekly lows if there's profit taking and the market's pulling back. So that means the traders are keeping their foot on the gas to the bear side. I definitely want to be bearish. I can't even touch. Wow, there's a lot of negative gamma in the markets on Facebook right now. And we don't have a lot of options expiring.
Oh, boy.
We do not have a lot of options expiring short dated unless there is today. So prior to today, Facebook had roughly 2 million options. Today alone, we have 431,000 options. That is 20% of the total option volume. It's huge. And for something that's normally super call heavy, it's very even right now. 238 calls, 238,000 calls, 194,000 puts. So how much of that is short dated right now? Of the 400,000 options, that's 30, 45, 50, it's about 100,000 on the call side. 30, 45, 60. You almost got 100,000 on the put side. Short dated options are mixed. Here's the interesting thing about this. So let me kind of put it like this on like a volume profile. If you look at all the call volume, other than the 300 strike, like let's imagine if I make a bar really big, that's a lot of call volume there, right? After 300, this is like the volume. It's just like nothing until you get to 335. Like this. It should be like this. There's like no volume until 335. And then there's a decent chunk of change, but not even then. Actually, it's more like, it's like this 300, 335, and then just no volume. So it's like a big pocket of air on the bull side below it. This thing has potential room to run to 300. Now, when I look at the put volume from 335, we see this. We see, see decent, and then it just gets thicker and thicker and thicker. It's all the strikes in between. There's a consistent amount of volume today, all the way down to 310, 300. So there's a lot of people taking bearish bets on Facebook. I'm sure some of it's selling premium, but a lot of it's probably selling, they're probably buying puts. And yet you see very little call volume between 335 and 300. So I think that's going to put pressure on Facebook to probably make a 300 run today. Let's see here.
A 300
not
run.
Not today, but I mean,
that would be insanity.
I actually don't. We're 323 right now. Yeah.
That would be wild if that happened. Part of me,
I can see this going to 305 in the next few weeks. And if the sentiment doesn't change on Facebook, maybe this week, maybe not this week, could be hard. But next week we could, the week after, sometime in October, we could see this thing hit 305, which is $18 below where we are right now. That to me seems very reasonable.
I'm with you. I should have put my money where my mouth is, but I didn't. But I really don't like this company or the stock.
I don't either. After the Wall Street Journal articles came out, I kind of felt like, okay, that's about as that was like the final coup de grace, in terms of the practices that they've taken on, knowing that they were doing it. So,
all right, Chris,
I think a lot of people are gonna have the same sentiment on it.
Chris, tell people where they can learn more and find you.
Yeah. So we have an options bootcamp course at secondskies.com or site. You can go to secondskiesforex.com. We own both domains, same place. And so, we have a ton of free content there on options. We have a ton of free videos all over the board. So check us out at secondskies.com or secondskiesforex.com. And I have a YouTube channel, but I don't really post videos on there anymore. I really just post some of my latest updates and things like that. Hey, this is the latest stock article for today. This is what I'm looking at and this and so forth. So check it all out, all on the website, secondskies.com. And Twitter, you can find me at secondskiesforex as well.
This is fun. Chris Capri, what a fun day to have you on, man.
It was good to be here, Spence. I think this is the first time you and I have done a Get Technical. So we've done a few shows before, but I really enjoyed working with you. This is great. So,
I don't know what show we're on right now, but it is. So, Chris, have a good rest of your day, man.
You do the same. Take care, everybody.
Guys, Chris just gave us like 45 minutes of his time. That was so kind of him. So kind of him. Drop us a like. Let's go. That was great stuff. See, Jose, thank you for the feedback. By the way, we don't hate negative feedback. Someone was in the chat cursing us out. I think it was Chad Jones. Chad, just use adult language as to why, or not adult language. Use like office language, right? Tell us what's wrong. Don't just cuss us out for no reason. Okay, whatever. It's 2:00, guys. Moon or Bust is able to go live. I'm just getting the word they are starting. They are live, which means I'm ending. And maybe they're going to talk about why we should all how DeFi somehow solves all of this, right? Facebook is down, stocks are down, but don't worry, DeFi will fix it. I don't know how. For that, you'll have to tune to Moon or Bust. So that show is live, and I'm going to wrap it up. Everyone, please remember all the information from our show, all of our shows, meant to be used as informational purposes, not for investing or trading advice. I'll be back in a little over an hour for At the Close. And Moon or Bust live right now. Everyone, I'll see ya. Try to stay green today, or I don't know. I don't know. Just...